Good morning. You're with us here on an early and fresh new edition of Bazaar Morning Call. We are coming to you from the CNBC-TV18 News studios, and what excitement, what drama, and absolute rocker of a night, if I may say so. The trade deal getting announced after the disappointment of the STT hike late at night, and of course we got you all the details if you stayed with us here on CNBC-TV18, starting from about 10 o'clock all the way to about 1:30 or so. Lots to track. GIFT Nifty is surging. The rupee in the offshore markets is up about a full 1%. So it's going to be a good start to this particular trading day. One of those historic ones, I dare say. With me, my colleagues Nigel and Rima. Guys, hi, morning.
Hi, good morning. Markets have been waiting for this moment for over a year now. And the question is this the turning point for FPIs to come back into the market? But I think it's going to be a terrific Tuesday. I got the memo and wore green.
Well, it's going to be a terrific Tuesday, and it's going to be a very spicy one as well. Hopefully by the end,
spicy.
It's going to be spicy. I mean, Rima, imagine stocks are going to be flying around. At least that's the hope, and you've got the color right, as you said, and you'll have plenty of company in the next 2 hours or so when the screen is going to be green. So a terrific Tuesday is what we're bracing ourselves for.
We're all pumped up. It's 7 a.m., but
after,
I think this...
after the mother of all deals, we have the father of all tariffs on board. Let's get going, guys.
Think about all the short positions in the system, right? That's essentially what makes this a day like this so furious, because people will want to get out, right? I mean, you don't want to stay short and stand in front of the market. So, I mean, the first leg is just going to be driven by all that short covering. Yeah. Yesterday, that headline was circulating that FPI's historic highs in FPI shorts. And you've been talking about this, Nigel. I've been talking about this. So this is a very large number.
Yeah. So shorts at record positions.
Record positions. Actually, the shorts have been at record positions. If you remember, last Tuesday when we came back, Monday was a holiday, Tuesday we came back, and it was the highest ever short positioning. So, and now this, right? So, I don't think anyone really expected, because it kind of died down, right? It'll happen when it'll happen, because so many stop-starts. We got the 25% additional tariffs in July. I think late July is when that happened. And then, around the Bihar election time, we were thinking we'll get a deal. Nothing happened. Yeah. And into the new year, we thought, well, something will happen. Nothing happened. And then, that Lutnick interview where he kind of sort of, went back and described why the deal did not happen. So I think expectations were running quite low. But, I think Sergio Gore, and we highlighted the importance of Sergio Gore. If you remember when he came, I remember that Friday. Yeah. He was supposed to take over on Monday. And but he's someone who's got the years that President Trump, as we now know it, and what a way to do it, right? Something coming. I think people were scrambling last evening in terms of what happened finally.
I think you remember that, Prashant. You had mentioned about Sergio Gore coming in there on Friday, and on Monday the markets were, getting pummeled at around 12 noon, 1, and then he came and said, Prime Minister Modi is a good friend, and we look at India as a buddy. And I recall that big recovery.
PM Modi is a good friend, but the important thing is that President Trump is a good friend of Sergio Gore.
He's an insider.
So that makes all the difference, right? I mean, who you can call, and in this case, apparently you can call President Trump himself.
And we've got a deal which makes us very competitive with the rest of the Asian markets as well. So in line with the rest of the emerging market peers as well.
So 18%
by doing it like a year
to
later.
19, 20, etc. So, I mean, it's one for the ages, right? Thinking that we'll get the best deal first. But we got the best deal, but last. Yeah. So maybe with a year's delay in that sense. Let's actually listen to, Sergio Gore, U.S. Ambassador to India. He spoke with my colleague, Zaka Jacob, earlier. And Zaka began by asking him how the deal was achieved. And let's play that out.
All the credit goes to President Trump and Prime Minister Modi. Since I arrived in India about a month ago, I have said, and I truly mean it, that the two leaders have a great personal relationship. And that is something that carried this deal forward. The potential between India and the United States is limitless. And so I'm thrilled that India is getting this 18%, which is a massive drop from the previous number. We have incredible deals ahead. And so, as I've said since I've arrived here, the best is yet to come.
So, Ambassador, if you could clarify for our viewers, India was paying 25% reciprocal tariffs and 25% Russian oil tariffs. The second set of Russian oil tariffs are now removed, so India just pays 18% tariffs. Is that the final rate?
That is correct. As you saw in the truth that the president wrote, part of the agreement is that all nations around the world stop buying oil from Russia in order to bring peace to the situation. And I know the Prime Minister deeply cares about bringing peace in that conflict, as does President Trump. So the number, as it gets finalized, will be that 18%.
What about on the question of the other assurances which President Trump has mentioned in his post that the Indian Prime Minister reportedly made to him? Could you walk us through that, please?
I will leave that to the trade negotiators. As you know, ambassadors don't necessarily have in their portfolio the trade deal. But overall, this is incredible news. 18%. There's a lot of demand. When the United States is open for business under President Trump, it's a new era. And frankly, from the start, we've said the president has a great relationship with the prime minister. A lot of people did not believe that. He truly does have a great relationship with the prime minister. And this is why this happened. Under President Trump's leadership, we have renegotiated deals all over the world. So this was not anything specific to one country or another. However, I will say that this trade deal is more favorable because of their relationship.
Okay, well, Derai Durustai, as they say. Ed Yardeni is with us, President of Yardeni Research. Matt Orton is with us, Chief Market Strategist at Raymond James Investment Management. Gentlemen, great to have both of you here. We're starting a little early and we went on to a little late because the deal has finally come through. Ed, what do you make of it? And I mean, you know, I guess the question to ask is, will this change sentiment in a durable way? Ed, what's your sense?
I think it should. It's a win-win-lose situation where the United States and India are big winners and Russia is a big loser, as it should be, given the horrible war that it's fighting against Ukraine. But this clearly shows that while Modi has gone over to Russia and had discussions with Putin, and he's gone over to Xi, at the end of the day, this is a very powerful economic link between the United States and India. It's very bullish for India's economy, India's stock market, especially since India already got a tremendous deal in its trade with the European Union. So it's been home runs all the way.
Matt, you've been sort of, you know, keeping the faith, and I guess patience is eventually rewarded. As I was saying, we were expecting to get the deal first and the best one. I don't know if this is the best one looks like in terms of just purely numerical stuff. At 18% compared to ASEAN, etc. It's a better deal, but of course, late in the day. What do you make of it? FII sentiment more than anything else?
Well, you know, Prashant, it's nice to at least have some good news finally starting to come. And I think it is a meaningful impact, and hopefully it will start to change sentiment around foreign investors, because I think that's been the biggest hurdle when you look at the alternatives to India. You've had incredible runs in South Korea, in China, in Taiwan, largely related to artificial intelligence. And that's one of the key reasons India has been, I'd say, forgotten about on the FII front. This certainly helps. Coming on the heels of the union budget, where perhaps STT maybe wasn't as favorable. But in addition to changing around sentiment, this also, I think, will help provide more long-term visibility into earnings growth for some of the winners that are already going to benefit from the union budget. You look at areas like agriculture, machinery, manufacturing, taking artificial intelligence and building corridors in India. All of those areas are favored under the union budget. I think those are going to continue to benefit as a result of this trade deal too. And as a result of India's tariff now being competitive along with Vietnam, Indonesia, the Philippines, it's going to help make India a key hub of reshoring and moving supply chains away from China. So I think that's going to be critical and should definitely help earnings growth materialize to the extent that foreign investors want and need relative to some of the alternatives across the emerging market complex.
We can see that Dalal Street is seeing green, but look at HDFC ADR and Infosys ADR overnight was up nearly about 4.5%, and that gives you an indication of the way the market will open here. Matt, morning, and thanks for joining in. Now, while you've always liked India, are you incrementally more bullish? Will you look to increase your weightage of India in the portfolio basis this deal?
Yeah, I think it's going to be very idiosyncratic. So I've been very specific, as we've talked about in the past, with respect to my exposures in India and really leaning into long-term, high-quality winners. Names like M&M, like we've talked about in the past, this is a clear winner. It's a winner from the budget. It is a winner, especially as you bring back, and have more free trade for parts, components. You look at a name like HCL, that should also be a big winner of both from the union budget as well as this sort of trade deal where you're going to have more artificial intelligence contracts signed. So I think there are some very specific opportunities. But Rima, I think also what could really help close having more improved foreign investor sentiment in India is going to be the RBI this week too. If we can have one more cut and some guidance that we're done for the time being, I think that should help sustain some of the gains that the rupee has had. And if we have stability on the currency front, I think that's going to be absolutely critical for getting foreign investors to actually allocate dollars along with their positive sentiment.
Hi, good morning, gentlemen. It's going to be a big day of trade here in the Indian markets. Matt, two quick questions. Do you think this deal is enough to get those FI flows back? And do you think it's time now for the Indian markets to get back to its outperforming ways? Because the FIs haven't been there, and India, after a while, was underperforming all global markets.
Yeah, Nigel, I think this should help domestic sentiment as well come back into the market, just given the more challenging run we've had over the past couple of weeks. And this definitely should help on the foreign investor front. Short covering is going to naturally make that happen. And again, if we can have this followed up by the RBI, I think you're going to start to see foreign investors finally say, valuations have reset. India is the fastest growing large economy in the world. We need to have exposure here, especially because this is a consumption-driven story. It's not a centralized government policy story like a China. So that's the attractiveness of India. And given the pullback, I would like to think you're going to see more dollars start to come to India.
Ed, we've completely, there was US market trading, but I don't think anyone in India is looking at it. It's the only news which matters is this. What's happened, Ed, last night, and anything notable from price action overnight?
Well, what I see right now, at least for the United States, is the focus has really been on more domestic issues, particularly on the Fed. And we do have a new Fed candidate to run the Fed as the Fed chair, and that's Kevin Warsh. And everybody's scrambling to read what he said in the past. And I think he's basically coming across as a supply sider and a tremendous ally to the administration, because he's all for creating a golden age in the United States. And he sees fiscal and monetary policies cooperating to do that. So I think he does want to lower interest rates, and I think he's going to justify that by reducing the balance sheet of the Federal Reserve. So the outlook is looking increasingly like we're going to have another very bullish year for the global economy. Despite all the tariff frictions and tensions last year, it looks as though things are kind of settling down. And I agree that bringing down India's tariff from 50% to 18% is a great development, and it does make India very competitive with other countries that are increasingly benefiting from manufacturing leaving China and looking for other places to go. Now, I know that China's had a lot of European leaders visiting recently, as well as a Canadian leader, but I think they're just trying to demonstrate that they don't depend on the U.S., where the reality is they very much do depend on the U.S. So I think it's, as I said before, it's a win-win for India and for the United States. I think it's a lose for Russia, and I think it's also a lose for China. China is just not a happy trading partner. They have too much excess capacity. They're dumping goods all over the world, and so you can do a deal here and there with them, but at the end of the day, it's pretty annoying to have them dump goods into your market and putting your businesses out of business. So again, everybody, I think, is looking pretty good in this deal.
Ed, did you catch the India budget? There is a tax holiday till 2047 for foreign companies to set up cloud data centers here in India. That's a 21-year tax reprieve. Now, because India was always labeled as anti-AI, and it underperformed many of the emerging markets because it lacked any sort of an AI play, do you think this piece of news surrounding the data center and the tax holiday addresses the anti-AI label when it comes to India?
Yeah, when you're looking at the universe of emerging markets, the best way to play AI has been South Korea and Taiwan. It's no secret; those stock markets are up significantly, and when you look closer, it's really Samsung in South Korea and it's Taiwan Semi in Taiwan. I'm not. It doesn't seem to me as though India has yet to see a company like that emerge, or a few companies like that emerge, but it certainly could happen now that India's sort of embracing the concept of data centers and AI.
All right, Ed, I wanted to ask you about gold, because that's been another interesting asset class. You've been bullish all along. If I recall, more than 12, 18 months or so, you've been in the camp that said gold has got more to go, and it's been a splendid outperformer. What's the view on gold from here on? Last couple of trading sessions, it pulled back a little bit, but it seems, between the two precious metals, gold still finds a place. And if you continue to see that shift from the global bond markets to gold, then gold maybe has more legs. What's your take?
Well, I think the sell-off on Friday had a lot to do with the increase in margin requirements in the futures market and the Chicago market. The CME said, well, this is getting a little bit crazy here with silver going straight up, gold going straight up. We want people to have more margin. They can't leverage it up as much as they had been. The silver and gold prices are really determined in the futures market. That's where all the action is. That's where the trading really is. And that's where the leverage is. And I think the CME did its job of trying to calm things down. And so silver was especially crazy. And so having it go into a one-day bear market with a drop of 30% makes sense, as does the 10% correction in gold. But I'm no expert on silver. I'm not an expert on gold. But I think the world is extremely wealthy and is only going to get wealthier. And as stock markets go up around the world, people want to diversify. And one of the best diversifier for stocks is actually gold. And I think the S&P 500 gets to 10,000 by the end of the year. And as it does, I think they'll be rebalancing into gold. And gold, I still think, goes to 10,000 by the end of the decade, as is the S&P, I should have said, goes to 10,000 by the end of the decade.
Oh, no, absolutely. We'll thank both of you for joining us bright and early here for us, and we'll come back to you and keep discussing the mood as it turns and track it with both of you. Once again, appreciate your time here on CNBC. GIFT Nifty, I just want to quickly indicate where we are starting, 800 points higher. So, 50 Nifty futures closed at 25,140. We're at 25,930. So that's a very, very smart move, which is coming through on the GIFT Nifty. I think the offshore rupee also has made a massive move from where it was. So I think a full one rupee move is what we've seen as far as offshore dollar rupee is concerned. I think this, of course, is yesterday's onshore close, and things have moved after that on the US and other places where dollar rupees traded. We'll take a quick commercial break here. We'll come back. India-US trade deal is done. For those of you who are waking up and joining in right now, the deal was announced last night, and India's got an 18% tariff. Indian goods going into the US will be charged 18%, not 50%. And that getting announced, markets, of course, will react to it. We come back and get you all the big voices and all the special coverage. Stay with us. Welcome back. It's a bright morning, and it's going to be a bright morning when markets open as well. GIFT Nifty is indicating a big open, 800 points higher, and the strength in the rupee, and it'll show up everywhere, absolutely everywhere. The lack of this deal was perhaps it's hit sentiment, and Rhythm Desai, for example, yesterday was saying that there's this big gap between where macros are and where asset performance has been. It's the widest he's seen in his career. One of the reasons for that big divergence between strong macros and performance was the lack of a deal. A year later, and people pointed that occasionally. That has changed last night. Shireen is now joining us. Shireen Bhan, managing editor, CNBC-TV18. Shireen, good morning. You know, we were on last night. It's still AM and morning, and we got the deal, and markets will rejoice.
I don't know whether we should say good night or good morning anymore, but you know, what a night it's been. But at the end of the day, I think what is important is that the stalemate has been broken. This has been a stalemate that's been on now for about 9 months, and we've now finally seen a breakthrough on that front. Of course, the nitty-gritties, the finer print will still have to be examined. We still need to know what concessions have been agreed to and so on and so forth. But I think the headline is that, you know, this partnership, this relationship, where there were concerns on whether this was going to be an irreparable loss for the India trip, that has been at least mended for now. So I think that in itself is good news. But besides that, Prashant, I think, you know, from a market as well as an investor standpoint, this was the big overhang. So I think, you know, they will take this with both hands. The fact that there is now a deal on the table, how that deal works out, what the contours will be is another story altogether, which individual sectors will have to look at carefully. And I also want to highlight what the Commerce Secretary told us yesterday. He said, whatever happens is going to be an early harvest deal. And that's what, if you remember, Anup Vadhavan, the former Commerce Secretary, was also explaining to Parikshit, you and me last night at 1 a.m., that this is not the big omnibus deal that was being spoken of. This will be an early harvest deal, which will have select goods you know, in the mix. So that's, again, something to watch out for. Now, the next steps, how quickly is this operationalized? Will we see those executive orders being passed today or over the next few days? That's the question. In fact, you know, it would be good to use the U.S. Ambassador Sergio Gore's soundbite, because he kind of explained what happens here on Network 18. So it would be important to play that out. But it's also crucial to understand that, you know, President Trump is claiming unequivocally that India has given an assurance that it will not buy Russian crude. Now, while our Russian crude imports had declined, they were not zero. So we will have to see what the government says. And, you know, Parliament is in session, so I would imagine that this is now going to be a matter that will be brought up in Parliament, and we will have to see what the government says on that front. He's, of course, also made big claims of purchasing of U.S. energy, Venezuelan crude, and so on and so forth. So all of those details, Prashant, will also have to be looked at.
Yeah. Shireen, there is that the oil bid, right? And Prime Minister Modi's the tweet is, of course, silent on that. And the other one, which President Trump has unilaterally claimed, is that India will likewise move forward to reduce their tariff and non-tariff barriers against the U.S. to zero, right? Now, again, details of that will come through, I guess, later. And those are important details. It's the headline tariff will matter, but I think this also will be very important to track.
Those will be important details. But again, and I go back to the conversation that we had with Nisha Biswal last night, where she was also alluding, and as Parikshit has also been reporting, that as part of the negotiations, there were tariff items where India has apparently agreed to zero tariffs, but we will have to wait to see what those are. In all of the messaging last night from the Indian side, whether it was the Prime Minister or the Commerce Minister, etc., we haven't seen any further details emerge on what has been committed to, what has been agreed upon. So we will just have to wait for that, for the fine print to emerge. But yes, those will be crucial aspects to consider. But Nisha Biswal did say that in her understanding, as part of the negotiations, there was assurances on some product lines.
Yeah. Shireen, thank you very much, and see you in office soon. Thank you for running us through all of that.
Nigel and Rima.
Sorry, missed that, Shireen. What was that?
I said good luck with the markets.
Thank you very much, Shireen, for that. So that's some perspective and nuance with regards to what's come through, apart from, of course, the headline number as well. Let's play out sound bites of Madhu Kela, and Madhu was, of course, gracious enough to join us late at night. 11:30, 11:45 is when he came on, and sort of stayed with us and walked us through market implications and what he really expects to see. So just want to play out a portion of this. Listen in.
There will be not only short squeeze, but I would argue that a lot of foreign investors who have been kind of sell India mode for some time, there could be a lot of foreign buying also will come in the Indian market. So on one hand, you have domestics which will continue to buy. On the other hand, short squeeze plus some real long buying from foreign investors. So it's a perfect setting for the markets to go much higher. You have the European Union deal, you have the US deal, and now the tariff being reduced to 18%. I think this is a perfect setting for the market. It will show up on companies which have been kind of impacted, as you rightly said, some of the names. But my personal view, Prashant, is that it will show up in a lot of small cap and mid cap names. The one notable change in the budget was the buyback, right? And we have seen a lot of small cap names have been completely sold off in the last 12, 18 months. So this sentiment, coupled with the potential of companies to buy back, wherein they don't have to pay any tax. The tax is on individuals now. So I would reckon that lots of companies will end up doing buyback wherever the valuations have become really attractive. The whole basket of financial, because that is where you can deploy large amount of money. And Prashant, the valuation otherwise in consumer companies because of growth, and technology companies because of this impending issue of AI. I think, the financials become kind of obvious choice. And commodity stocks anyway have done really well over the last 1 or 2 years. So I don't see them participating as much as the financial stocks.
Okay, let's slip into a break on that note. On the other side, we'll continue our discussion on the India-US trade deal. We'll also connect with Pallab Banerjee of Pearl Global Industries and R.K. Vij of the Textile Association.
Welcome back to this special coverage. The big news coming overnight is that India and the United States have finally come up with a deal and the tariffs reduced from around 50% to around 18%. The sector that's going to be potentially the biggest beneficiary is the one that got hit, textiles. Vinny joins us to run us through which are the stocks that will gain the most. Morning, Vinny. An early morning, but a bright one for you.
Absolutely bright one for me as well as for the sector. But obviously, what we'll see is that, textile sector saw a sharp impact coming in terms of the margins, especially because they were at 50% rate of tariff for these last 6-7 months. And because of that, even Q3 numbers that highlighted the impact of tariff. Now, obviously, 18% tariff that comes in as a relief because now it's competitive with other countries, whether you look at Pakistan, Bangladesh, Vietnam, China. We're slightly better than that in terms of this 18% tariff rate. Then what are the exposure that one has? Gokuldas exports, 70% exposure. So sharp impact that they saw in terms of margins. Even when we spoke to them during the Q3 numbers, they highlighted that the main impact was because of the US tariff on the margins. Welspun Living, 65% is the exposure to US markets. Indocount Industries, again, 70%. Pearl Global, 50% approximately is the exposure to the US market. KPR Mill, Alwyn Limited, all of them do have 20+% exposure as well. So it becomes a positive for all these companies. And obviously, though the companies are highlighted that US order book was strong, but now this furthermore, improves even the relation with the clients. As of now, the client as well as the companies were taking the impact on the margins. Now with this 18% tariff, that's a relief that comes in for them. And improvement in terms of order book, obviously, is a possibility from the US market for all these companies as well.
Thank you very much for that. Let's invite Palab Banerjee, Managing Director, Group President at Pearl Global Industries, and R.K. Vij, President Emeritus of the Textile Association, on the show. Gentlemen, thank you very much for joining us early this Tuesday morning. It's a big day, historic day. Tariffs have been cut from 50 to 18%, lifting a major overhang, not just for the market, but particularly for your sector. Palab, let me begin with you. You have previously stated that the 50% tariff made the Indian operational model unsustainable for the US clients, forcing you to either offer 15% discounts to the US clients or move your production to other facilities, say in Bangladesh. What changes for you now with tariffs coming in at 18%?
Good morning. Yes, definitely it's a very good news for the sector and for all of us. Definitely we don't need to move these programs or these orders to the other countries at this point of time. And the bottom line, definitely that's advantageous. For a company like Pearl Global, where we had other opportunities at the other countries, we have been, downplaying the India portion of the business because US business was not sustainable in India. With this news that has come in the last night, definitely we look forward to the growth of the top line and bottom line in India as well.
So particularly on the bottom line, will you pass on the savings to your customers, or will it flow into your EBITDA margins in Q4 FY27? What could margins look like for Pearl Global?
Okay, we are supposed to come out with the results, I think, this week itself.
But just broadly.
Yeah, see, definitely the bottom line, this is a kind of advantage that we are giving to the customer just to maintain the business in India. So our customers give us the choice. Either you make this production from the other countries and, which is more of the same balance. Everybody within the 19-20 of tariff. Now, to compensate that out of India, we were giving this 50% discount. So that, I think, goes away. So I don't think it's like passing off. It was not a sustainable thing to pass off to any customer. So I think this will definitely come to the bottom line.
Hi, good morning, gentlemen. Good to see you all in. Palab, I believe you've booked you've booked a party for all your colleagues this evening. Or is it too early to party? Palab, just a quick, refresher. Out of your total production, how much is in India? If I remember correctly, I think it was 25 to 30%. You could refresh that number. And the exposure to the United States was more than 50%, which was gradually coming down. So what's the update on both those two numbers?
So yes, India, last year we saw about 25% of our total top line was coming out of India. This year, because of this last 6-7 months, there was a little bit of switch. I think that 25 number would come down to a little less, I think 4-5%, 3-4%. We can see that, how it moves. And the second part of your question is, sorry, I missed that.
US exposure. US exposure.
US exposure was about just below 50%. I think that's something we have taken a lot of action so that, the overall our exposure to all the markets. You see, the biggest markets are European Union, US, followed by UK, Japan, and Australia. These are the 5 big markets, which almost, if you see, about $250 billion of export or import that these countries do. Now, as a good company, we would like to balance it out accordingly. So I think that what we had a huge exposure in India, I think for 3-4 years back, to US 3-4 years back, that is now getting more balanced. So I think that's a strategic decision that we will continue to implement.
Good news for now. Let's get in Mr. R.K. Vij as well, President Emeritus, the Textile Association, who joins in. Hi, Mr. Vij. Good morning, and thanks a lot for speaking to us here on CNBC-TV18. Well, when we've been speaking to textile companies over the last few months, after the tariffs went to around 50%, some were even okay at around 25-30%. They said, let's get it down at least from this 50%. And at 18%, looks like a brilliant deal. What are you making of it? And how pleased are you?
Ram Ramji. I think we are very thankful to our Honorable Prime Minister Modi ji and Trump ji. And in interview in CNBC about 4 months before, when the tariff was put on 50%, I told that, of course, the tariff has been put, but I think it will come down after 2-3 months. The time has come, of course, 1 month delayed, because USA for India, USA is a big market because traditionally we were supplying to USA. As on today, the total USA market is around $288 billion, and out of that, $130 billion they are importing. Only apparel, if you think that $80 billion market is there, now the tariff has come down 18% over units at Tirpur, Panipat, Faridabad, Ludhiana, Surat. They will be very happy. At least in the winter season, both of the leader has given us the warm welcome, and we are very, very much happy. And of course, we are one way with this 4-month tariff over FTA with the EU also has been done, as said by the MD of Pearl, that EU is also a big market, but because we were long back supplying to USA, as on today, the total market of government of USA is 84 billion, clothing and fabric is 65 billion, household home textile is 23 billion, technical textile is 58 billion, other is 58 billion, 288 billion is a very big market for us. So for us, for USA, India was needed. For India, USA was needed. So it is a very good day is today, and all textile, Indian textile will be very happy, so that the over 20-30% of capacity which were not working and we were looking after for other countries, we will started working there. And I once again thank Trump ji and Modi ji that they have taken a decision. आखिर में दोस्ती ही होती है. Friendship is a friendship. So our textile industry is very much happy.
Yeah, no, absolutely. Mr. Vij, just those numbers, right, across categories, product categories, what I'll do is I'll ask our team to get in touch with you, and just those numbers will be important in terms of the individual segments that you spoke about. We thank you for joining us, and as markets open and they start to react to all of this, we'll get you back on. Pallab, it's always a pleasure. Thank you for your insights and appreciate your time here on the channel. Let's put up Gift Nifty. Gift Nifty was indicating a 800-point higher start. It's 1,300 points now. So it's building up, and 1,100 points now. So 26,255. When I think that's markets, right? I mean, when they're despondent, there is no bottom in sight, and when they're excited on the upside, I mean, anything can happen, and big things can happen. And this is one of the last time. Maybe we should look at the 1,000-point jumps and 1,000-point higher starts. And the last time, I think you had to go back a while to get a 1,000-point kind of a jump. So we'll try and do that and pick out the data as well. Our research team is joining us, and we'll sort of, get you lots of perspective on sectors most affected, etc. Vinny was telling us about textiles, but autos is another area. Rima?
Yeah, so just want to run through the exposure of some of these auto and auto ancillary companies to the US market. So Tata Motors could be a big beneficiary because JLR is highly exposed to the US market. 33% of JLR volumes come from the US, and JLR accounts for 86% of Tata Motors' passenger vehicles consolidated revenues as of last year. For Samvardhan Motherson, the overall exposure stands between 18 to 20% to North America. For Sona BLW, US forms more than 40% of the total revenue. Bharat Forge also a similar exposure of 38% to the North American market. Bharat Forge supplies forging and parts to North America. So the tariff reduction lowers the export cost burden and improves the export viability. In other auto ancillaries, Balkrishna deserves mention. 17% revenue comes from the US. For Eicher Motors, it's a very small exposure. 2% of the volumes, Royal Enfield volumes, come from the US. But I think the big ones are going to be Tata Motors, where JLR accounts for 86% of the overall consolidated revenues. And then you also have a Bharat Forge and Sona BLW, with nearly 40%, 38-40% revenues from North American markets.
Got that, Rima. Thanks a lot for that. Well, let's get in Sonal, who joins in this morning to tell us about the impact on the oil and gas space, and the other big beneficiary could be the chemical space. Morning, Sonal, bright and early.
Good morning, Nigel. In the chemical space, there are a lot of companies which have exposure to the US market. Naming some of them, the likes of SRF, there's Naveen Fluorine, Accutas Chemicals, Neogen Chemicals, Aarti Industries, Vinity Organics as well. And they had highlighted how US tariffs were impacting their business. In fact, in the conversation we had with SRF, which is one of the biggest players in the chemical space, they indicated that tariffs created a lot of uncertainty in the system. They hit them really badly. And for the last 3 months, exports of the US have been impacted. So this looks like a relief that could come by for the chemicals industry overall. Neogen Chemicals had indicated some battery chemicals have been left out of the scope of tariffs from US. So again, the fine print of this particular deal is very important to understand what is kept out of the deal and what is still there in that 18% mark. Oil and gas, of course, that's the biggest reason why we saw these tariffs come by, the penalty tariffs as well. Trump in his post indicated that India will not buy Russian crude oil and will buy from the US and possibly Venezuela as well. And remember, Russian imports have been largely nil since November, especially from the sanctioned entities. But the conversations with these oil marketing companies indicated that yes, they're not buying from the sanctioned entities. Any other purchase from Russia is totally an economic decision from the non-sanctioned entities. HPCL had earlier told us they evaluate up to 100 plus crude varieties over every year. There is enough crude available. They also started buying from the US. So they had been changing their product mix. In terms of Venezuela, remember Reliance has in the past purchased 20% of their daily crude requirement from Venezuela. And now they tie up, it could benefit them by $5 to $8 per barrel in terms of discount, which will aid their GRMs. ONGC is also awaiting the dividend. So maybe things could move faster. And if Venezuelan imports come in, it could be positive for the oil and gas industry.
Yeah, absolutely. Sonal, thank you very much. That's very helpful. And, you know, what we'll do is we'll also look at individual stocks, right, in each of these segments. And our team is working towards that. And we'll put out all of that. There is, of course, that headline euphoria and large caps, etc. But there's going to be material changes for individual businesses depending on what they were selling into the US exposure, etc., etc. So very useful. We'll take a quick commercial break here. We'll come back and we have Conrad Saldana joining in with some fun perspective and how this changes sentiment from here on. Stay tuned. Okay, welcome back. I think GIFT Nifty is indicating a 1,100, 1,200 point higher start. Look at that, 4% now. It's building up momentum. And 26,200 is where we're at. Conrad Saldana is with us. Conrad, good morning. Great to have you with us here. I guess we can, as an investor, I can congratulate you and you can congratulate us because it's a happy occasion. And it's been a long time in the coming, right? Finally, it's come. Rate is good, 18%, very competitive compared to some of the other ASEAN countries, exporting countries. So what do you make of it? And let's just dive down into the market straight up, because I guess people want to know, right? Where will this show up in the biggest way? So the big beaten down, the Gokuldas and the Pearl Global and the textile apparel companies, they say, yes, I mean, it'll show up big time. It'll show up. They perhaps all open up circuit today. But where else beyond that first order?
I know, Prashant, thanks for having me on. I know there's been tons of tariff vacillation, right? And this comes as a relief. Still, there's a lot more bilateral trade agreement negotiations that need to happen. There are a few items that's on Section 232. Yes, you see the pop with a lot of the export-driven sectors, but broader to make a meaningful impact broadly for investors, foreign portfolio flows to come in, that to also drive FDI and also CapEx, right? Domestic CapEx on the private sector side versus just government spending. I think you need to see that for a more sustained recovery. but also for earnings to meaningfully inflect apart from a pop in the 2 or 3 big sectors that are exposed. So I think you need to see it more broadened out. Yes, you are going to get a relief rally from this, given how dire it was for certain sectors. The export sectors, gems, jewelry, some of these got impacted down 30, 40% in terms of actual top line impact. So it's massive. There will be a relief, but I'd love to see this more broadly impact India, Inc., and start to bring back foreign investors in a more meaningful way from a portfolio standpoint.
That 232, Conrad, right? Section 232, what you're saying, right? So it's autos, aluminum, timber, copper, trucks and shipping. I mean, that looks like, and that's the national security section, right? So that doesn't go away.
Yeah, the Act of 1962. That's steel is also on that list, but that's about 10 odd percent of that trade. But still is, it does matter. So and there'll be still the bilateral trade agreements that have to happen individually on this, because there were the tariff as well as the non-tariff barriers that the US had highlighted. So there's a little bit of work to be done, but a huge step in the right direction.
And what about on oil? Because when we were purchasing Russian oil, we were getting it at a discount. Now we'll have to purchase the US and Venezuelan oil, $500 billion worth of that. Overall, in terms of agriculture, energy, etc., is the committed amount. What does that mean for India? Are we, in a way, sacrificing our energy autonomy? There is the logistics of moving to different types of crude oil. What is your view on that?
I think it's early to say, but no pun intended, but that's a crude deal. We'll see how this pans out. But listen, the refiners in India are used to processing heavier crude. And so, Jamnagar comes to mind, right? That will process the crude. Yes, there was that arbitrage, if you will, and the discount with Russian crude. Potentially that comes through from Venezuela. There'll be a bit of that being processed in the Gulf states in the US, but there's an opportunity also for India. So it's a commodity. I think India is reasonably well placed to deal with that. And I think the earlier days of the arbitrage from Russian crude that showed up in your gross refining margins, those days are gone. So I think getting access to that crude is fine, and I'm sure the refiners will figure it out.
All right. Hi, Conrad. Always good to see you, and thanks a lot for joining in. Tell us, a couple of big beneficiaries will be from the chemicals pack as well as the textiles. Do you have exposure out there, and will you be giving it a relook right now?
Nigel, not a big exposure for us. So we just look longer term. They are good businesses, and I know with Gokul Das, that's done well. A few names you mentioned, Wellspun, they're well positioned. We tend to be much more on the domestic side of India. I know there's a lot of excitement about China plus one from a manufacturing standpoint, but ideally, India is a growth engine, right? When I think of the US growing now, if you ignore even the fourth quarter growth, at 5%, even it's 4.5%. That's super strong growth. You're seeing Japan starting to inflect, and I think India is another big growth engine of the world that I think we need to see pick up again. Okay. And that's why we look much more for the domestic side of the Indian market. Right. We will evaluate a couple of the exporters occasionally, but at the other side of this, you have the tech side, which is an exporter, right? You've got 70 to 90% of their business comes from the US or US dollar denominated, but obviously the rupee is heading the other direction, which isn't entirely helpful for them either.
All right, Conrad, since you said you're quite excited about a couple of other themes, could you name a couple of them, the domestic story, maybe data centers as well? I think we've spoken briefly about it in the past. If you could name a couple of stocks.
Yeah, we like defense, so we've been exposed to Bharat Electronics, much more on software, on the engineering side of it, rather than heavy asset with HAL. Data Patterns is a name we've been exposed to for a while again. So these are good businesses that we're exposed to. On the data centers, is still early days. NetWeb is a name we've owned for a long period of time. I think there's some real estate proxies to it, but it tends to be asset heavy and not as much of tech. It's much more infrastructure plays in that regard. Still early days to that, but there's not a whole bunch of opportunities that you can get to play on data centers in India. You don't have as much of the IDC or independent data centers like you have in China, leave alone the whole hyperscalers that you have out of the US.
Yeah. Conrad, lovely. Thank you very much for joining us. And, as you were saying, right, there is this 232, etc., and perhaps autos and steel and a bunch of other things are out of this 18% number. So there's no relief. Apparently, it's a question mark, and we're trying to confirm it. So you may want to stay on. And I just want to bring in my colleague Parishit, and a lot of the clarity will emerge from there. Parishit, tell us, what are you picking up from your sources?
Well, now is the stage when the Indian side will be seeking documentation from the US, and India will also share documentation on reduction of tariffs. So that will make it clear as to what are the tariff lines it applies to. This will literally apply to all the goods that are traded between India and the US. Some items may be down to 0, some may be at 18% or 13%. So we're looking at 18% as an average tariff between both sides. Having said that, what about Section 232 tariffs on grounds of national security on automobiles, steel, aluminum, timber? Now, this was to protect the U.S. industry. Now, this was a horizontal tariff which applied to all jurisdictions, all nations. This was not specific to India. So possibly it could stay, but we are waiting to see if there is going to be an exception for India. There will be clarity on it very soon. The Indian side will be seeking clarity from Washington, D.C. And when both sides share official documentation with each other to notify these changes, there will be clarity on what happens on the Section 232 tariffs as well. And we're expecting this to happen very soon. Usually this can take a couple of months, but our sources in the government say that because this is such a momentous occasion and very important for our industry, they will try to get it done at the earliest. Marco Rubio is set to meet Subramanian Jaishankar, our external affairs minister, in the next 24 to 48 hours. There will be a meeting with Scott Bessent as well. So we're expecting more clarity, more legalities on this to be done soon.
Yeah, absolutely. Parishit, thank you very much for that. And we'll keep coming back to you for that clarity as you get it. And markets are waiting for all of it very, very keenly. We'll also connect with Sunil Segani of Abacus Asset Managers, Harish Krishnan of Aditya Birla Sun Life Asset Management on the other side. It's ticking past 8 o'clock now, 8:05. We're back with all of that in just a bit.
Welcome back. We've termed it as a terrific Tuesday. It's going to be a blockbuster start to trade. The GIFT 50 suggesting a 4% gap up, and hopefully we end somewhere in that vicinity. Sunil Singhania, founder at Abacus Asset Management, join us on the show. Hi, Sunil. Good morning. Good to see you win. What a moment, right? Out of nowhere, this deal has been announced. Do you think this is the moment that the bulls were waiting for? Time for India to give up the underperformance and maybe outperform the globe?
Good morning after a long time, at least for the markets. I agree, Nigel. I think the markets was lacking a catalyst, and this certainly comes as a catalyst. In fact, I jokingly say that people had just stopped even talking about stocks. It was all about gold, silver, and I have never seen phones not ringing after a budget the way this time it was quiet, because no one was just interested in knowing what to buy. So I think this comes as a very, very pleasant surprise. It helps I would say, the mood, which was the most important. It definitely helps the economy, the corporate profit growth, and hopefully the currency should also respond. So I think all in all, the positioning is light. FIs have been short, has been seen by the futures, open interest. Position on the domestic side, at least on the speculative side, is low. And expectations after the budget fall were also very, very low. So this definitely comes as a big, big catalyst.
If you are deploying money, Sunil, good morning, and as they say, right, Derai Durustai. So where will you focus your energies on? There may be relief. A 4% gap up will show everywhere. There'll be relief across sectors. But where will kind of you focus on if you had fresh money? I mean, I think most people are already invested, but fresh allocations, where will you focus on?
So I don't think sector-wise anything dramatically changes. Obviously, there are some smaller sectors like textiles and, which are direct beneficiaries, but those are small sectors in an overall market cap perspective. I think the first thing which will happen is obviously, there will be a nifty trade because if you have to put in big money, it's only going to be in the larger companies. The smaller companies might end up 5-10% higher without volume. So it is futile to start looking at some smaller companies, at least today. So I think the first trade is obviously going to be large liquid nifty names. But one good thing, Prashant, about this is, and I hope this sustains in the form it has been announced, because that is also always a gray point with the President Trump, is that the uncertainty which was holding back purchases of Indian goods by the US will go. So we'll have a double catalyst. The inventory levels at the US buyers' end are very, very low. Everyone was just buying what was absolutely necessary. And this might also trigger some advance, or I would say some inventory buildup also. So maybe the next 1-2 quarters, you might in fact have a big, big boost in terms of exports to the US. So I think some engineering companies should benefit. Textiles, obvious names, but I would say that this whole sentiment really, really helps us. And one thing which we also not have to forget is that now, if this 18% is the way it is, we are at significant discount in terms of tariff to our competing countries. In fact, even lower than Bangladesh, Vietnam, China, of course. And that would also be a catalyst for some of the sectors which traditionally had competition from some of these countries.
You said large liquid names is where Nifty, right? Where it'll show up first. Today, perhaps not the day for smaller, this or that smaller single stocks in that sense. Where IT services, Sunil, there's no direct correlation for IT services. It's a large champion export sector for India. Financials is the other one where there is perhaps headroom and it's always been a favorite for foreigners, etc. So just view on those two?
No, IT services, in fact, they had some benefit out of currency depreciation. I think that should negate to a certain extent. But IT services anyway did not have tariff. So I don't think it's a tariff trade. In fact, there would be a trade where people would want to move out from some of these names which had not fallen to some of them which had fallen a lot. Financial services have been very, very stable. I think it will be neutral for them. There might be some little bit of inch up in terms of credit growth because of sectors which are exposed to exports.
No, Sunil, my question is not the real impact, but the sentiment trade. Where does it show up?
Sentiment trade, if Nifty goes up, obviously 35-40% is financials. So financials have to participate very clearly.
Okay. Sunil, one final question. When Prashant was chatting with Madhu last night, he was talking about how the change in the buyback rules, which were announced in the budget, could actually be a big catalyst for many of the mid and small caps, which have underperformed greatly. Your view on that? And do you think mid and small caps, today, of course, when money flows in, it goes into the large caps, they will do well. But mid and small caps, if you want to allocate money via SIPs or lump sums into mutual funds, would you look at mid and small cap?
No, we are incrementally very positive on small cap. In fact, we would be coming out with our back a small cap fund also on the mutual fund side very, very soon. On the buyback, I think it's a very big positive. Though promoters buyback will be taxed at a higher level, but from a non-promoter perspective, I think now it's equivalent to the capital gains tax. So there will be a lot of companies where promoters don't want to participate, where they feel the value of the stock is not reflecting the two fundamentals. Instead of giving dividend, they might resort to buybacks. And I would say that you will start to see announcements very, very soon, because buybacks completed after 1st April are eligible. So the announcements will start, I would say, as soon as this month itself. We definitely expect a significant amount, being sucked out of the market by way of buybacks, and a lot of companies using this as a tool.
Okay, all right, Sunil, always a pleasure hearing you out. Thanks a lot for joining in. The last time around as well we spoke, you were saying that you're optimistic and this market is presenting an opportunity. Good times for the market, and I believe personally as well, there's a wedding in the family. So best wishes to you and the entire family. February is going to be a rock star of a month. Thanks for joining in.
Thanks a lot.
Well, let's welcome Harish Krishnan, CIO Equity at Aditya Birla Sun Life AMC, who joins us. Hi, Harish. We spoke a few days ago and you were telling us this market is providing an opportunity. You sounded extremely bullish. What do you make of this big landmark deal?
Good morning, Nigel. So yes, I think it is important to take the enormity of what has happened in the last 18 months or so, because it's been like, if you look at equity markets, it's been on a smooth mode for now almost 18 months, even at the headline Nifty level. Of course, there is a carnage below that. But in these 18 months, what have we really accomplished? We've kind of done a trade deal with almost 70% of the world economic activity. With the remainder, which is primarily China, we've become even more cooperative and collaborative in terms of trade. The second key aspect was a rating upgrade that India got, which would ideally have got a lower cost of capital. Thirdly, when there was pressure on the export channel, the domestic consumption market opened up with respect to the GST and the direct tax cuts. Now, all of these have meant that, Indian corporates, possibly any which case, had very good balance sheets, where we're throwing in a plenty of cash flow. Today, if you were to look at it, if you were a corporate CEO, this would possibly be the moment for you to really, start investing massively as far as, your own company fundamentals and financials go. And therefore, from an enormity of this, I think it is massive. Yes, for sure, from a trading point of view, there is definitely a positioning aspect, and the fact that we've underperformed. I think all of that can potentially reverse very, very quickly, as we'll see possibly by even the end of the day. But let me also frame it in a slightly different way. India's share of world economic activity, which is world GDP, is today close to about 4%. We do think that over the course of the next decade, this is likely to move anywhere between 7 to 8%. And this is just mathematics speaking out, right? India's share of world market cap is today at 3.4%. I do think that, from 3.4, we would be looking at anywhere between 7-8% over the course of the next decade. So that is like a massive, massive amount of potential of wealth to be created in a country like India. The good thing, of course, is that, domestic investors, including us, have been very, very counter-cyclical. Even as foreigners have kept selling out a lot of their equities, we've kind of kept buying in. And as you rightly recalled, we did see a lot of opportunity in terms of lower valuations. And today we will see foreigners turning very, very pro-cyclical and kind of coming back in. So therefore, all in all, I think it's a great morning. But I think it is also a start of something, terrific to come through.
Harish, on FPIs, right? Do you think they will, good morning, do you think they will make up for all that stock sale because they've sold. It's been discretionary decision. They've actually actively diversified away from India. They've sold because of whatever high valuation. This was a sentiment negative and other kind of factors, etc. as well. Do you think they come back in a durable way?
I do think so, that they will come back in a very big way. The only thing that was hurting was the currency trade. I don't think that their appreciation of Indian macro has changed quite dramatically. Their appreciation of Indian companies has changed dramatically. The only issue was valuations, and valuations have also kind of cooled off, especially in the larger 100-odd names. Of course, at the mid and small cap, one can still quibble. Even there has been a reasonable amount of correction and froth letting out. But the bigger issue for them had been the consistent or persistent slide in the currency, at which that I would imagine, it's kind of reversed. And therefore, I do think that it's going to come through in a reasonably stable way. The only caveat to this, Prashant, is that, unfortunately for markets, the supply has been relentless. And so I think under 5-7% up, we'll again start seeing a whole spate of issuances, be it IPOs, be it private equity sale, etc. And a lot of these supplies invariably are going to get absorbed by foreigners as well as certain domestic participants. But so therefore, the full impact of that change in stance probably will take some time for the markets to come through.
Okay. All right, Harish. Good speaking to you, Harish. The last 6 months or so, we have spoken numerous times, and you have been telling me, Nigel, it's time for the Nifty to outperform gold. And we spoke on Friday, and later that evening, we knew what happened. So it seems that's going to play out. Harish, thanks a lot for joining in, giving us your view. We look forward to chat up and have a rocking day ahead.
Same to you. Thank you.
Okay, all right. Well, I think what we could do is maybe we could take a short break. We come back. We'll continue our discussion on the India-US trade deal. You stay tuned. Welcome back. So after the mother of all deals, the father of tariffs, he's on board as well. As India and the United States, they have announced the big trade deal overnight. So it's not going to be focused on STT. Today it's going to be only TT. That's Terrific Tuesday. We're bracing ourselves for a solid trading session. And keep in mind, with the weekly expiry as well. So that's what will add some spice to the session. Now, if you're looking at the mutual fund industry, well, we've been making this point. They're sitting on ample cash. So ample firepower out there, close to 5% of cash, which is around 1.9 lakh crore odd. Now, the FI seemed to have got a little bit jittery yesterday itself. They covered close to 7,000 short contracts, and they also wrote puts. That's something we haven't seen. So maybe, in fact, a bit of a hint that there's something coming about and things are moving in the direction of a trade deal. On an absolute basis, though, the FIs remain aggressively net short. The clients are net long. And that normally is an ideal situation with both of them at the opposite ends of the spectrum. Let's talk about the Nifty levels to track for today. The Nifty will start above the 200, the 20, and even the 100 EMA, as per what the GIFT Nifty is suggesting. And you'll be bracing for a solid close today. The Nifty Bank, well, that one has defended the 58,000 zone numerous times just in the last 10 trading sessions. And today, potentially, we close close to around the 60,000 odd mark. That's what's going to be on the wish list. So it appears a replay of the 2020 budget day reaction could play out, when the Nifty ended down by close to 2% on budget day and followed it up with a massive surge in the coming week. This time around, actually, 1 week down the line, I won't be surprised if that gain is more than 3.5%, because we've already gained close to under 30% or thereabouts from the budget day low. The rupee as well, it showed some kind of stability yesterday. It's likely to further strengthen today, and hopefully we see an FI buy number by the end of today, and maybe, in fact, a relatively larger one. So the short point is, this is a massive sentiment booster short. The shorts in the system will be a bit of a blessing. The GIFT Nifty is suggesting a gap up. Hopefully we end around these lines. But brace yourself. It's a terrific Tuesday that's coming up.
Well, Nigel, absolutely. And, one of the most heavily shorted markets, suddenly, face-to-face, face to face with a India-US trade deal, right? So, amazing. And that's markets for you, unpredictable, but that's what also makes it so interesting to track, to report on, and of course, we've enjoyed it since last evening when we actually reported it as the news actually started to come through. Now, I just want to, I know Nilesh Shah is with us, and I'll just bring him in. I just want to play out sound bites of Finance Minister Nirmala Sitharaman. And this was the first interview after presenting the budget on Sunday. It was a wide-ranging interview with Network 18's Rahul Joshi, and she addressed the fall in the rupee, the hike in taxation on futures and options. A lot of this, of course, is now some of these topics and concerns, perhaps because of this India-US trade deal, relegated to the background, rightfully so, but take a listen, important nevertheless.
Finance Minister, your party has always stood for a strong rupee. But if you look at the Indian rupee in the last 1 year, it's been on a losing streak. It's almost lost 10% against the dollar, around 16% against the euro. Are you comfortable with this level of the rupee, and are you happy with the steps that the RBI is taking to maintain it?
Let's understand one thing. Our party, yes, was in favor of and is in favor of always a strong rupee, no doubt. But it's also got to be predicated in the context of how the economy is. Economy suffering from high inflation, economy being fragile, and your rupee value also not in a good position, makes it really hard and difficult for everybody. But one thing I can clearly say is economy is fine and fit. Yes. Your macroeconomic fundamentals are strong. And that's not to say, look, therefore are you being indifferent to rupee-dollar exchange rate? I'm not indifferent. But I'll also look at it from the realistic challenges that we have to understand where rupee is finding itself now. Reserve Bank is closely monitoring.
So you are saying that you are comfortable with this situation at the moment?
I'm leaving it there. I don't think I will say I'm comfortable, not comfortable. I'll leave it there.
Okay. India's holding of US Treasury bonds have declined about 25% compared to the peak of 2023. At the same time, Reserve Bank of India has increased its holdings on gold. Do you see this trend continuing?
I think many central banks, not just Reserve Bank of India, are pitching to buy more gold, and India seems to be following the trend.
We will slip into a break on that note. We'll keep getting you excerpts of the conversation with the finance minister. But on the other side of the short break, we'll continue our discussion on the India-US trade deal. We'll connect with Nilesh Shah of Kotak Mahindra AMC and Tahir Badshah. Stay tuned.
Welcome back. Nilesh Shah is now joining us. He's Managing Director of Kotak Mahindra Asset Management Company. We also have Tahir Badshah, Chief Investment Officer at Invesco Mutual Fund. Nilesh bhai, good morning. Great to have you with us here. Tahir, good morning. Nilesh bhai, if we can start with you. As I was saying earlier, der aaye durust aaye. So it's good that it's come, and of course it's also come at a time when the market positioning is extremely one-way, one-sided. So on the long side, it's very, very light. And I guess that is the reason why this very large 4% gap up, which GIFT Nifty is indicative of. But your first thoughts, Nilesh bhai, is this has gotten done now?
So undoubtedly, Prashant bhai, this is positive from a sentiment point of view. There was a hanging sword on Indian equity rates and currency market because of uncertainty over US tariff deal. Obviously, we stimulated our economy, so from a growth point of view, there was no negative impact. But there were sectors like textiles, aquaculture, handicraft, gem and jewelry, which were getting impacted. Now, this first boosts sentiment. Second, it provides support to sectors which I mentioned. And finally, Prashant bhai, we have to go through the details. Devil is always in the details. We have to wait for the official documents to be released to figure out which sectors are benefiting. In this, there will be give as well as take. So obviously, we have to wait for the details.
Yeah.
Nilesh bhai, morning. This is Reema here. The question is that after so much selling by the FPIs, FIIs in the last 1 year, will the FIIs now come back because of the turn in sentiment? Because earnings-wise, it's not going to change the needle too much, considering the sectors which benefit are very small in the overall scheme of things. But do you see FIIs coming back in a meaningful way?
So in some sense, as Prashant mentioned, the timing could not have been better than this. We have seen December 25 quarterly earnings impacted by labor code and rupee depreciation. March 26 will also carry some impact, but thereafter earnings growth should recover to double digit. Now market obviously tries to discount future. So we are seeing earnings growth recovering from single digit to double digit in FY27. And sentiments have improved. Plus, we also have trade deal with EU FTA, which will get activated hopefully in FY27. Put together, there are reasons for investors to be optimistic about earnings growth.
Yeah, 100%. Let me get in Tahir Badshah as well. Tahir, good morning. So what's the investment team and what's been the, I'm sure Nilesh bhai, you and Tahir, both, everybody's been, lesser amount of sleep, lots of calls, getting ready as markets open. Nilesh bhai, you're smiling. Am I right? I mean, I'm getting that feedback from many.
Undoubtedly, we have to, put our data in place. And you want to speak to as many people as possible in absence of official data release.
Yeah, absolutely. Tahir, come in there. Your first sort of headline thoughts in terms of, and start with where this will show up. I mean, the GIFT Nifty is up 4, so the Nifty, the large caps, of course, will do well. Financials are a big part of it, so they do well. There are these beaten down, but small list of stocks, right? Directly hit by high tariffs from the US, which will benefit in an outsized way. But what else? Do you think this will change sentiment? And what about mid and small caps, which was where bulk of the pain was really? Will that also get a bit of a lift sentiment-wise, and then maybe stock by stock because of specific, impact because of high tariffs, it may show up. But do you think this broadly provides a bit of a bid across mids, small and mid caps?
Yeah, Prashant, I think so. At one level, we have to, if you were to just put things in perspective, 2025 actually has been a year of extremes, in many ways, whether you look at it from a global standpoint or a domestic standpoint. There have been things which have happened which were never anticipated. For example, the whole gold and silver kind of price movements, the kind of AI trade. You look at the depreciation of the dollar, you look at the depreciation of the rupee, the slide down in inflation. In so many different ways, slide down in earnings as far as domestic India is concerned. Underperformance of our markets, and plus even the fact that, FI sold out probably $20 odd billion, which is a historic peak. So I think in many ways the market has operated at extremes, and therefore a snapback or mean reversion, and at least some of these things, if not all of it, can definitely happen. And I think this provides that catalyst. I think what was probably missing in the budget, the punch is now being provided by this deal, and I think it therefore opens up a lot of things. See, actually, when the trade hit, the tariff hit happened on us. The dislocation in earnings was not as significant in any case to begin with. It was in a few sectors which were, let's say, directly impacted. Gems and jewelry, textiles, and a few others, which are the direct, the ones which are clearly impacted. But I think, and therefore to that extent, the reversion also as far as earnings is concerned will not probably be immediate. In any case, a cyclical recovery in earnings was expected in 2020, FY27. I think what this deal does is operates at different levels in terms of probably, stabilizing the rupee in the first place. If that were to happen, then as you wanted to know, I think the interest of foreign investors in India will start to kind of, come back a little more, simply because the currency, at least one factor, is relatively more stable. It is a macro reset at one level. It is a policy reset at one level. I think the tone of the communication between the two leaders does seem to suggest that there could be more. There are certain things which are yet not clear. For example, H1B and a few other things, pharma, and there are issues. I think even oil, for that matter. So to that extent, I think it's a macro reset, and therefore it should perhaps first reflect in multiples. It does probably also open up the door for thinking of earnings strengthening beyond FY27.
Got that. Tahir, you would have had a team meeting already by now in the morning. It's been an early start for us, but at Invesco. And what are the big buy ideas now?
You guys didn't still give me a chance to get to office, but nonetheless. No, the buy was basically this, that, look, as I said, I mean, it can operate in different ways. So, for example, if the currency stabilizes, it makes a lot of difference as far as overall the RBI's hands were a little tied down in terms of liquidity and so on. I think that gets a little better. As that gets better, I think it improves the outlook for banks. I think after the budget, there was a little bit of disappointment that the anticipated cut or reduction in deposit rates and improvement in liquidity will come about or no, especially on account of the higher gross borrowing number. I think those recede in the background to some extent. It gives you more policy maneuverability. And I think in other ways, for example, I think tech is also going to be a beneficiary, notwithstanding the pending clarity as far as H1B is concerned, because that clearly opens up doors. I think in a scenario where the U.S. trade deficit is only going to compress, our ability now to probably compete more effectively for U.S. export market share with countries like, let's say, Vietnam or Pakistan or a few others, that becomes relatively higher. And generally, India has worked well when you have that external stimulus or external markets do well or external economies do well. So I think it will have its indirect implications to many parts of the overall economic spectrum. So today, I think everybody will be a beneficiary. By and large, there will be almost all sectors. Maybe there'll be a little bit of question mark as far as oil and gas is concerned, especially if you were to probably buy more expensive crude. Yeah. But otherwise, I think by and large, I can think of everything probably being positively impacted today.
Yeah, yeah. Tahir, you said we didn't give you a chance to get to office. We never left office. Now, I'm joking, but we were live till 1 o'clock last night, 1 a.m. So we signed off saying good morning and good night, and this morning we said good morning. Doesn't happen very often. It's one of those days we'll remember.
You guys have signed up for something. I have signed up for something else. So
No. At some level, we've all signed up for the same thing. Just a quick word, right? Nilesh bhai, when markets and you get these big gap up, suddenly 4%, right? And it's a reset in that sense. And you know what happens? It's happened before as well. You get a flourish, and then suddenly people get to a point where they say, oh, valuations are now again too expensive. But then, if this is, as Tahir also pointed out, you also said, sentimentally positive, and sentiment is powerful, pieces falling into place, then the earnings component of the valuation argument also starts to move higher, hopefully. Anyway, earnings are supposed to be better than last year. It's one big virtuous cycle, isn't it? Nilesh bhai, any thoughts?
So Prashant bhai, days like this makes us humble and make us believe that time in the market is what makes money for you, not timing the market. Second, a market is driven by fundamentals, flows, and sentiments. even if fundamentals are good and flows and sentiments are bad, then instead of 100, you'll probably achieve 70 or 80%. And when flows, fundamentals, and sentiments are all together, instead of 100, you may end up achieving 120. So fundamentals matter undoubtedly in the long run as stocks are slave of earning. But flows and sentiment also continues to impact short-term movements. And now sentiments will be positive. Flows should start on the positive side. And eventually earnings recovery is coming. But at the end of the day, we still believe the returns of equity markets will majority come from earnings growth and much less from the valuation re-rating. So one will have to moderate return expectation. One will have to stay invested for longer period of time so that you don't miss a day like today.
Yeah, absolutely. And it happens quickly, suddenly, and then markets respond so furiously that it's all done in 2 or 3 days, and you kind of sort of missed out if you, as you said, if you try and time the market and be too cute in that sense, right? Tahir, would you agree that on the earnings question, this provides sentimentally very positive on so many layers, right? Because we're only discussing the first layer, but there are so many other ties, B2B, company to company, technology side, and adversarial position was perhaps hurting all of that. And all that kind of goes away. So sentiment positive on layer 1, layer 2, layer 3, and things we can't imagine right now. So that valuation argument sort of perhaps also, you can argue against that, the fact that valuations are very expensive, because you can say this also gives a sentiment boost and perhaps down the line earnings boost as well.
Yeah, so I think, if we were to the next coming few days see a maybe 10% rally all put together, I think you would have priced out a little bit of the forward earnings for sure, and to that extent, therefore, it will be it will continue to kind of then stabilize at those levels. But it is quite likely that hello, can you hear me?
Yeah, please go on.
Yeah. So, but what it will definitely do is that it will improve the visibility of earnings beyond FY27. Today, all of us as market participants, while we are all, at least I would say that for myself, that we do expect a cyclical recovery in FY27 simply because of the positive impulses which have been set up in the last year in terms of whether it be rate cuts and even taxation and so on.
Yeah.
Those were in any case supposed to revive earnings in FY27, but we were working relatively less visibility as far as FY28 is concerned or beyond. I think this opens up the door for that visibility to come through. And if markets see that visibility, then maybe valuations beyond a particular point don't ratchet up further.
Yeah.
They stabilize at higher levels. So that's the essential part, and you essentially contain downside.
Yeah. So, Tahir, 2,500, 10% is 2,500 points.
Yeah, I'm saying we're done 4-5%, let's say today, based on whatever is visible in front of us, and over a period of the next some time. I think we have to remember that this quarter earnings, at least from what it is visible, is trending quite well. We have still not seen the aggregates. There are a good number of companies yet to report.
And yes, absolutely. The third quarter so far, what we've seen is good. So it's possible, right? I think you're right. 4-5% is now, and the next few days it's possible.
Exactly, because the thing is that if you probably get to that stage where we see earnings at least downgrades halting and probably a sign of upgrades coming through, and that essentially will broaden the market as well. To your earlier question of mid caps and small caps, particularly small caps, I think in any case we are of the view that these are typically times when small caps should be bought, because whenever you see this disparity, that small caps significantly underperform, those are good years to gradually accumulate. But not with the expectation that you get your returns in 27, it's 26 itself, probably in 27 and 28. But when they come through in gushes.
Got it. Tahir, thank you very much for your time. Great speaking with you. Good insights, and we'll continue chatting. Nilesh bhai, thank you very much for joining us bright and early. We'll leave you to it. Full day ahead. Thank you for joining us. So that's the market perspective. Shireen caught up with a bunch of secretaries, and we've been, of course, at CNBC-TV18 for the last few days, been speaking to ministers, officials directly involved with the India-US trade deal. And this is Commerce Minister Piyush Goyal on what we can expect, and the fact what he said that we can expect a deal very soon. Listen in.
I think we are making good progress. and working in the spirit of friendship. My good friend Jameson and I, we've known each other since Trump won, and I have absolutely no doubt that between him and me, or between both our teams, the synergy is very good, the understanding is very positive, and we'll be able to finalize very quickly.
Okay, last evening, Shireen caught up with Commerce Secretary Rajesh Agrawal about the progress of the India-US deal. This happened just a few hours prior to the official announcement coming through on the trade deal. Listen in.
We remain engaged, very positively engaged, and it's progressing very well. The two frameworks are still in place. The larger framework is going to take time because US is a big economy, and a larger, deep, wider FTA will always going to take time. But the one which can be done in the short run is the one which is an early harvest, can address the reciprocal tariff bit, is also getting shape. When it will happen, how fast it will happen, these are the questions. I think I'll not put a date to it, but we are hopeful that we should get it sooner than later. Let's see what happens next.
Sir, I'm just going to push you a little bit on this. When you say we're waiting for it to take shape, or it is shape in progress and work in progress, can you explain to us what are the cornerstones, what are the pillars that both sides are working on, at least as far as this reciprocal tariff framework is concerned?
Largely, see, reciprocal tariffs are in the good space. If you look at these tariffs are in the good space. So one of the key discussions in this is how we are able to align our tariffs on both sides to see that we work towards a more balanced trade between the two nations. So that is going to be the core of whatever we achieve in the first. Aligned with that, when you, as you mentioned, tariff itself is not the driver of trade. The entire ecosystem, the policy certainty or the non-tariff issues also needs to be addressed. I think we are trying to discuss on both sides to see that when the deal gets finalized, both sides are better off than where they are standing
How much
today.
convergence is there today, Mr. Agarwal, on the framework to deal with the reciprocal tariffs? Would you say we're 90% done, we're 80% done, we're 50% done? How much convergence is there on both sides?
I think you heard my minister a few days back where he said most of the sticky issues are now out of the... So that's where I will leave it, that most of the sticky issues are more or less resolved. So we are progressing fast. Let's see what happens.
All right, time to slip into a short break. You come back, we'll continue our focus and discussion on the India-US trade deal. We'll also get our research team to tell us what it means for select sectors. Stay tuned.
Well, we are nearing the market open, the pre-open at least for now, 1,000 plus points on the index. So it's a big open. Rupee markets also will be showing up with strength. Rupee appreciated yesterday, and I think if you take cues from the offshore market, it's a 1% appreciation here. Lata is joining in with what she's picking up from the fixed income bond side. Lata, take it away. What's your understanding?
Huge for the fixed income and the rupee market. NDF market yesterday night, when you all were having your conversations on air, it was already at 90.60, and you should remember where it closed. The official Monday close was 91.52, so it was already 90.60, 90.50, and this morning the NDF rates, which at which we may open, is about 90.15, 19.20. So we are going to open over 1% higher, probably 1.5% higher. The indication was that even on Monday, the rupee had recovered by 50 pice, that is 0.5%, and the sense was that RBI was not doing so much. So either people were privy, there were a lot of dealers telling us we will not bet against the rupee at 92, just all the bad news is in the price, it's dangerous to go beyond that. So there was a sense that, we have now become, long rupee, short commodity currencies, that kind of trade was also working. But now the market will watch out for two things. Rather than running away with, will we end at 90, 89, 88, the two things to watch, what will Reserve Bank do? just as they control volatility on the way down for the rupee, they may control volatility on the way up. You know, for the economy, a stable rupee works. When an FPI is investing, he doesn't want that overnight my gains are suddenly eroded. So stability works, not necessarily an 88 level or a 90 level. So it's possible the Reserve Bank will come in. The second point, and we are forgetting, you know, the FPIs will look for valuation. So if the Nifty opens at the implied GIFT Nifty level, it's possible that valuation concerns will also remain. They may wait and watch. So the immediate flows of FPIs is what the market will watch out for. Does that come? And what does RBI do? These are the two big people with dollars, and they will be watched.
Thank you very much for that. Guys, did you see that ticker? If markets open up with a 1,000-point gain, it will be history in the making. It will be the biggest single-day gain that we've seen on the Nifty, if indeed we have that gap up opening of single day in absolute terms. In percentage, of course, it was at 20% circuit, UPA. You remember that.
But the percentage, you know, it's just the base.
Of course, yeah. So the last big one was May, post the India-Pakistan ceasefire.
I'll just add, no, you're absolutely right. Because the base is big, 1,000 point is historic. Just the other point is that there now will be more liquidity. You know, banks were losing deposit also because dollars were actually moving out. You know, there was cash outflow. Now, if that stops, FPI selling stops, then you may have easier rates also. It could have a bond market effect very soon.
Yeah, absolutely.
For now, yeah.
You know, it's a big one, right? We'll just have the management of Aarti Industries with us in just, and I'll just read out the GIFT Nifty, the rupee, and the other rates while we wait for the company. Okay, I think what we'll do is we'll try and, because chemicals is one segment, as Sonal was telling us earlier, where this is going to show up in a big way, right? So we'll get you perspective from one of the top companies, exporting companies, that is Aarti, in just a bit from now. But in the meanwhile, let's address some other sectors as well. Shrimp exports were massively hit. There was in between, news and understanding that many have started to divert away from the US, which is the largest market, to European countries, etc., etc. There are lots of listed companies, by the way, Avanti Feeds and the rest. Ria is here with some understanding and context on this sector. Ria, take it away.
Well, yes, shrimp stocks will stand to gain from this reduced tariff rate in the US now that the tariff rate has come down to 18% from the earlier 50% rate. Shrimp exporters will regain a significant portion of their competitiveness within the other countries. Earlier, these companies had faced a lot of volume and margin pressures because of the higher tariff rate, and now all of this is expected to ease out, and we will also see some earnings, improved earnings visibility once the new tariff rate comes into effect. There were also a lot of concerns around inventory build-up and working capital stress, and that is also now expected to ease out going ahead, and the companies will also regain some lost market share in the US. Now, in terms of the market size, the US is India's most critical market for frozen shrimp, which represents roughly 41% of the export volumes and 48% of the export value as of FY25. In terms of overall, for annually, India exports roughly 250,000 metric tons of seafood to the US annually. In value terms, that is $2.5 billion. So the US is a big market for these shrimp exporters. And now, if you just compare the tariff rate of India to the other competitors, Ecuador is the largest competitor. The tariff rate for them is 15%. For other competitors, for Vietnam, it is 20%. And for Thailand and Indonesia, the tariff rate is 19% in the US. The key stocks that will be impacted by this will be Avanti Feeds, Apex Frozen Foods, Coastal Corporation, Waterbase, as well as IFP Agro.
Right, Ria, thank you very much for that. Let's just put the GIFT Nifty up, the Nifty up, the pre-open. It's ticking 1 minute past the pre-open rate. The rupee, by the way, is opening 50 paise stronger. 10 paise stronger compared to yesterday's close. But that is also, I guess, and let it play out. I think that is also because of is that I don't think it's updated yet. Let's just refresh it, please.
See the ticker, 90.4.
Yeah, 90.4.
I refer to that, but the graph, the plate has not updated. So that's 10 paise appreciation, and so we'll just refresh it in just a bit. Okay, 91.51 to 90.40.
Yes.
Beg your pardon. I think a little sleep starved, so I saw that as it's a 1% appreciation, like the offshore market, the NDF market was reflecting, like Lata was talking about as well. So that is the dollar rupee. Let's look at the Nifty as well. It starts out, and that is up 1,300 or 1,400 points. and we'll look at that in just a bit. There you go.
Fresh all-time highs.
It's fresh all-time highs.
Fresh all-time highs, straight away, right? I mean, India-US deal, and we should play out the sting and the bells and whistles, and we should bring that out. It's a happy day. It's a good day. And,
I told you yesterday, towards the closer trade, you'll ask me why I'm dancing. Today it's going to be the ballet, the rap, the say what it is. It's that sort of a day. It's going to be a big day for the Indian stock markets. 1,000-point gain. I'm looking at a lot of stocks just in the first few minutes. They're already locked at upper circuit. So
maybe if you just look at something like say textile names, right? The one sector which actually was impacted, and they were forced to take discounts on pricing, etc., to be able to adjust for the tariffs, etc. Look at that. Gokuldas is up 20%. Pearl Global is the company we spoke to earlier. That should come up on your screen, and many others.
So let me tell you, Wellspun Living 20%, Aarti Industries 20%, Himmat Singha Seed 20%, Avanti Feeds 20%, Kitex Garments 20%, Vardhaman Textile Trident also up 20%. So that just gives you an indication, of course, and there's a gush of money coming in too. Many of the large caps. Titan is the one in pre-open, up nearly 10%. IT2 giving it company. But I think we've got Naresh Jalan, Managing Director at Ramkrishna Forging, joining us on the phone line. Mr. Jalan, thank you very much for joining us on this momentous day. It looks like a very strong opening, a record opening for the market. But just for the auto sector and auto ancillary, you all are under Section 232. So does the India-US trade deal benefit you, or you will still continue to attract a tariff of 50%?
No, still I think we are waiting for the fine prints. But whatever we have heard, that auto components also for India, basically all the engineering components fall under the new tariff regime. And also the industrial components going into oil and gas sector and the industrial equipment sector fall under the new tariff regime. So I think that will move from 50% or 25% to straight away to 18%.
Okay, so auto components, components to oil and gas industrial will now attract 18%. That's what you've heard?
Yes, that's what we have heard yesterday night.
And you've heard from whom, sir?
From our customers in US, we have heard from them. So we are waiting for the fine print still.
Right. So the autos as a space otherwise is not because of that. It comes under Section 232, right, Mr. Jalan?
Yes, it comes under Section 232, but I think like in other trade agreements with Korea and Japan, they were given an exception in terms of auto components and auto from 232. I think India also has been given such exemptions probably, and that's the reason our customers have come back immediately yesterday night itself that we may, by this, I think in a couple of days we may hear exactly, but it is going to be at 18%.
So all auto components, all auto component exports?
Yes, all auto component exports.
Okay.
But I think the best part is that the industrial component, which forms today one of the biggest exports in engineering, in oil and gas and the industrial equipment, which was charged under 50%, that will straight away come to 18%.
Okay. And what was the tariff under 232 for auto and auto components?
That was 25%.
Okay, 25 for everything else to 18, and for specific oil and gas, industrial supplies, etc., it goes from 50 to 18, where there is the delta is much bigger. Mr. Jalan, thank you very much for joining us. Very helpful that you are giving us that feedback, what you heard from your customers at this point in time. I think our technical experts are also with us, Mitesh and Sudarshan. Gentlemen, good morning. Good to have you with us here. Sorry we are coming to you a little later than usual, but it's a big day. And I think it will all come down to trade management and what do you do after a gap up like this? Because that's what makes money, right? I mean, the view is one thing, but how you execute. Sudarshan, you go first.
All right. See, the 2 days were no trade days. That means we are lucky we don't have any short positions. If you do have long positions yesterday afternoon when the market started building up, the gap up, after the gap up, have a pause and take your profits. There is nothing to buy. And please do not make the silly mistake of trying to go short. That would be silly. Just enjoy this market. All your portfolios have gone up today. Gold, silver, and today the shares.
Yeah.
Mitesh, chase the gap up?
See, not immediately. I think, if there's a massive gap up like the Nifty is showing, then I think I'll wait for it to the gift Nifty was showing. Then I'll wait for it to settle down. But if it's a small gap of, let's say, about 200, 300 points, then maybe yes.
Yeah. Let's refresh this Nifty, the rate. It's up it's up 1,200 points on that. On the graphic, it was showing a 1% change. It is not. It is. It's a 1,200 odd point. The pre-open, I think, is ended now. Sudarshan, in terms of specific trades, what do you have?
I'll give you the names because there's no sense in the levels. There are three mid-caps you can consider: Amber, AMBER, Hind Petro, and Concur for buying. You must understand that gap-ups are not good places to buy, but focus on them.
Yeah.
Amber, and the other one is?
Concur, CONCUR, Concur. Amber, Hind Petro, Concur.
Got that. Mitesh, what would you look at buying today?
I also have some buy calls, but I'm not sure how it will open up. So the risk reward has to be taken care before executing them. But a buy on IOC for targets of around 169, a buy on ABB for targets of 55.50, Adani Ports for targets of 14.55, and CG Power for targets of 6.30.
Okay, all right. Thanks a lot for that, gentlemen. Well, let's focus on the metal space then. We have Vikas Singh, Vice President at ICICI Securities, who joins us on the show. Hi, Vikas. Good morning. Good to see you. When everyone's celebrating that the tariffs comes down from around 50% to around 80%. But for our metal sector, it continues under Section 232. Just correct me if that understanding is correct. So there's no big change. Is that correct?
Yeah, you're correct that the 50% tariff on aluminum and steel will continue even after that. But sentimentally or indirect exports in terms of the other goods probably will go. So slightly positive, I would say, for metals as well.
Okay, so sentiment positive is what we're seeing for the metal index itself on that front. All right. The other big talking point is going to be on silver, right? Silver did $120. It came down to around $80. But I think most analysts like you are still factoring in, I think, $50, $60 an ounce. Could you tell us what is that number and what is the play now? How do you approach a stock like Hindustan Zinc and Vedanta? I recall when both those stocks were, they were shunned away at that point of time and everyone was negative. I recall that you were quite bullish on it. So what's the view right now? Because the stocks have seen already a big run.
Yeah, Nigel. So basically, we are building, we were previously building was $56, $57 per ounce on silver. Currently, in our estimate, we are baking in $90 per ounce of silver at this point of time, and still slightly bullish on Vedanta since the stock has run up a lot. So we are currently still have an ad rating on the stock. So slightly bullish stance, still maintain on the Vedanta.
So and between ferrous and non-ferrous, what is the preference? Give us your top two picks.
So we have actually started advising clients to start moving to ferrous at the start of the year, basically. Then the safeguard duty came, and currently, given the next 5 to 6 months is the peak demand season for ferrous, we are still basically more bullish on ferrous at this point of time versus non-ferrous. Our top pick is Tata Steel at this point of time, and on ferrous side and non-ferrous, Vedanta.
Yeah. Thank you very much, Vikash, for that. That's a quick update. There's a news break confirmation once again. We put out two big exclusives yesterday. And there's confirmation right now coming through. So AB Housing Finance, which is a fully owned subsidiary of AB Capital, and we should tag the stock as well, is raising 2,750 odd crores in growth capital, which basically means that it'll go into the balance sheet of the company to strengthen the balance sheet, to expand in a faster way. And that is the stock that should be in focus. The pre-open has ended, so you won't see a price change because the news is broken after the end of the pre-open session. So you will see a reaction as it opens up. And the transaction is valuing the company at 19,250 crores on a post-money basis. And, Advent will end up owning, which is a private equity giant, will end up owning 14.3% stake in the housing finance subsidiary. So that is AB Capital. Newsbreak confirmed. On your screen, at the bottom of the screen, 20% movers, Trident, Wellspun, Indocount, all the textile names. And I think there will be others as well, which will come up and give you a sense of the open itself. And we'll put that out. I think Vivek is standing by on solar as a segment and how that is. Okay. So I'll just wait by. There's 3 minutes to go for the market open as we kick off right now. 26,308 is 1,220 odd points higher. And let's get Vivek and let's ask him. By the way, if Mitesh, do we have Mitesh? Okay, Vivek is with us, so let me go across to him. Vivek, solar.
Well, that's right. Solar manufacturing supply chain, Waaree Energy, remember, has out of the total order book of 60,000 crore, almost 32.5% comes from the US market, big beneficiary, sharp gap up gain. ME Photovoltaic, Premier Energy, all of them have spoken about exports. Vikram Solar is another name from the renewable energy manufacturing space. Now, coming to the capital goods space, manufacturing space, very sharp beneficiaries. Have a look at APAR Industries, that particular stock, the third quarter revenues, 42% mix came in from the US markets. That particular stock gains big. Cummins India, ABB, Hitachi, all of these MNCs do have intergroup exposures. 15 to 20% of the total top line comes from the export market. Adani Enterprises as well as Waaree, both of these names, module exports to the US market, they also stand to benefit quite significantly. Other names include names like TD Power, Entar Technologies, Triveni Turbines. All of them do have material exposure to the US market. All of them stand to gain significantly.
Yeah, all stand to gain materially. Sudarshan and Mitesh are with us. Mitesh, the AB Capital is a stock. Any thoughts?
Well, Prashant, I think, the stock has corrected to its weekly support levels of 320 yesterday.
Yeah.
Middle of 317. Could bounce back to 345, 346. And if it captures that, even 360, 365 zones.
Yeah. Okay. Your 9-10 calls, Mitesh?
I'll go with long on Adani Ports.
Sorry, which one? Adani Ports.
Adani Ports.
Can we just put up the Adani stocks all on the screen as well? Because I think that was the other group of stocks which many people have been telling us perhaps this big positive reaction will show up. Okay, we'll do that as soon as markets open. And Nigel has walked across the big wall. I'll toss it across to him in just a bit. But just referred the market opening itself, and then we'll take it from there. What do we have? So Nifty, historic open, 1,200 points higher. 1,000 points, 26,030. Nifty Bank, 23,050, which is 60,950. You got the mid-cap index, which is up 4.5%. So the mid and small cap indices is where this is showing up in a very, very dramatic fashion. And look at advanced decline. When is the last time you've seen markets open with a 10:1? 10 stocks up for one stock down, kind of an advanced decline ratio. So, I mean, something's got to be said about that. Nifty is kind of cooling off a little bit, but this is just the start. 740 odd points is what you have. 25,822. Sensex 84,071. Okay, let me toss it across to Nigel, who's standing by on the big wall to take the market open forward. Nigel, take it away.
किधर चला गया?
Okay, I think, Nigel, what we'll do is we'll just come back to you. I think we're having a little bit of audio issue. We'll just fix that. But, I mean, it's a sight to behold. Actually, if you can just show pictures and look at the market opening on that big wall, right? That's the impact is quite formidable in that sense. 720 odd points, 2.9% higher is where we are at this point. I think we've fixed that issue. Nigel, take it away.
Well, that's right. That's right, Prashant. We're looking at that, the big move is what we're seeing on the Nifty itself. We're up close to around 900 points approximately. The number of stocks that are advancing way more than the number of stocks declining. And that's something that's really, holding you well. A few stocks that are in focus in today's trading session. The advanced decline ratio is good. And just take a look at the big gainers. Now, let's pull some of these stocks up for you on the screen. Gokuldas should come up for you. That's locked in upper circuit. Welspun Living, that as well is higher. Himmat Singha, well, that stock as well is up and about in today's trading session. So these textile players, they are having a blast in today's trading session. It's only green on the screen. Pull up a few more. KPR Mill, that's up and about. And Vardhaman Textile, that's the other stock as well in there. Big gains is what you're seeing on all of these names. Let's get a few of them actually up for our viewers on the screen. From the chemicals pack, we have Aarti Industries as well as Camlin Fine. All those stocks, in fact, are up and about in today's trading session. We're talking about Vardhaman Textile. Yes, the holding company as well is doing well. But I think we should get some of those other names up for you on the screen. Apex Frozen, we just had Ria telling us that it's a beneficiary. So that stock is up and about. And LT Foods as well. That's the other name. Moving up on rather large volumes in today's trading session. So good going out there. A few more gainers. Goldium, they as well have a fair bit of exposure to United States. Remember, when the tariffs were imposed, these stocks got actually hit. So they are seeing a big bounce back in trade today. And finally, Sterling Technologies, that's another stock that's doing well. Sambandana Motherson, big move is what we're seeing on that stock. Just take a look at these names. 10, 15, 20% is what we're seeing. And Carousel as well as Garwade Technical Fibers. So it's a super duper trading session. Big move is what we're seeing. This number, that's the one that you like. The number of stocks advancing, 2,400 stocks advancing, with just around 133 stocks that are declining. Guys, back to you all. Joining us soon in the studio.
Oh, well, that's looking majestic, Nigel. Thanks very much for that. It's a super start at this point in time. I can go through so many more names here, right, which are opening up, and we'll have them up at the bottom of the screen with regards. It's all 10%, 20%, 10%, 20%, that kind of a day. Kind of reminds me of that. I think the last time we had something like this was tax cuts. If you remember back in the, I think this is when. The 10% corporate tax cut which had happened, and everything obviously opened up 10%.
Even in May, on 12th of May 2025, post the India-Pakistan ceasefire, Operation Sindoor, we had about a 3.5%, 4% kind of an up move on the markets. It was a broad-based gain. The only sector, which is sideways today is ONGC. That's the only Nifty stock in the red right now. And large cap FMCG names like HUL, ITC, Nestle are not participating on the upside. They're in the green, but modest gains.
Remember, your attire is matching with all the greens, so that's nice. Prashant Jain is with us. He's founder and CIO at 3P Investment Managers. Prashant, good morning. Great to have you with us here. Thanks very much for joining us. And, I remember in our interaction at the sidelines of that Kotak event, I think which was the last that we've had on air, you said, it's one of the, it's structurally, this is the best we've seen for a long time in your career, macro-wise, etc. But there was this big disconnect between asset prices and the macros in that sense. So in that, a lot of things go to make that divergence, earnings, etc., which were a little slower. But this also was a big sentiment overhang, Prashant. So what is your first reading on the durable impact of this deal?
I think, Prashant, I would agree with you that this was a sentiment breaker, and I think it did. Our exposure to the US in goods exports is extremely low, and if you exclude the exempt categories, then that exposure is close to 1%. And these are also categories which have relatively very low share in the markets. So, I mean, I can completely understand the way markets are behaving. People must have been short, or there is a lot of excitement. But I would expect, just like it did not have too much impact on the downside, I don't think there is any durable, meaningful impact on the upside either. But it's a very good thing to happen.
Does it? I mean, but Prashant, there's somewhat as sentiment is a powerful thing, right? I mean, feel good, and I mean that motivates people to take action. Do you think that perhaps, and it becomes a slightly, I mean, it's not our job to do it, but from a foreign investor perspective, those who were saying when will they come back, this going away adds to the argument that you can kind of present, right? And it's all connected. It's a big one virtuous cycle. What's your sense?
Foreigners have been underweight India for three simple reasons, in my opinion. One was India was pretty expensive 18 months back. Second, earnings estimates were very aggressive. We were simply extrapolating the faster growth in earnings coming off the COVID lows. And finally, I think India was missing the popular narratives of these times, which is AI or semicon, etc. And these were the reasons why we saw so much selling. I think with the currency where it is, with the valuations having come off, with so much selling behind us, I think I would be a little more optimistic on foreign flows, and this certainly is going to help. Though the good thing in India is that the impact of foreign flows, one way or the other, is now quite small. Foreigners have sold 40 billion in 18 months, but markets, large caps have been flat. So I think when you are raising 5 lakh crores of capital a year, another 50,000 crores more or less supply, which is what foreigners do, I don't think it moves the needle meaningfully for the Indian markets. But I would agree with you completely that this could be good for a sentimental rally.
So you're saying that even if the FIs come back, it's not going to be a meaningful driver in terms of big percentage gains for our market, pushing us up towards, say, a 10% rally over the next few months? It doesn't.
Yeah. Nifty could rally if foreigners come back, because in Nifty there is hardly any supply of stock.
Okay.
And local funds in any case are buyers. But the moment you have good market sentiment, the supply of stock also catches up. So you were raising 5 lakh crores. If there is more money in the market, you may end up raising 6 lakh crores. So ultimately, markets will over time move depending on valuations and fundamentals. And I think the impact of flows is not that significant. Think of it this way. Why did the markets not go down when you had 40 billion worth of sales? So I'm not trying to underplay the role of foreigners for near-term movements, but longer term, these markets are clearly driven by local capital, which is far bigger, and also the supply of stock, yes.
So what is your view now, Prashant, on the markets 12, 18 months down the line, considering that we've gone through a period of time-wise, a little price correction, we've underperformed versus peers, earnings are expected to pick up, say 13, 14% by FY27. What is the view on the markets and how are you constructing your portfolio, the advice?
I think we are constructive on the portfolio. Markets have time corrected for, Nifty has time corrected for almost 16, 18 months. India's premium over EMs has been reverted. Foreigners are underweight. There is hardly any supply in Nifty. And as you rightly said, earnings growth mainly led by banks pricing in lower deposits. Earnings growth outlook for fiscal 27 is mid-teens compared to single digit in this year. So I think we have said this on record also, that the next meaningful move in the market should be on the way up and not on the way down.
Got it. Prashant, just a quick word on sectors as we look ahead, right? Now, this is a big marquee thing. It's happened, and thankfully it's come through early in the year. So where are your energies focused on? Is it which part of the market, in terms of finding those single stock opportunities, which could be wealth creators? Prashant, how do you think about it?
Prashant, I feel that large caps continue to offer better opportunities than small mid caps as a category. However, small mid caps have fallen quite sharply. So I think it is time for very, very selective buying into these names. On a 1 in 10, 1 in 20 names would start making sense. In large caps, I think sectorally, banks, insurance, automobiles, I would say even software, these sectors are looking good. I mean, I would be not constructive on consumer staples and retail, because these two sectors, I think, are expensive relative to their long-term growth prospects. And another point is, in these markets, the dispersion in valuations is pretty low, and there are hardly any deeply undervalued sectors. So this is not a market where you can make quick or big money, in my mind.
Prashant, you said the lack of AI trades in India worked against India. Do you think the budget announcements related to data centers, tax holidays addresses that? India can become an AI services hub? That anti-AI label, can that go away?
I don't think data centers are a proxy for AI. They are a very highly capital intensive, very low ROCE business. It's a good opportunity for India, and it is great what has been done. But I don't think it is a proxy for AI at all.
Yeah. Sorry, IT.
No, on data centers, I asked that can it reverse the anti-AI label? That, he says it's a good opportunity, but it's not AI, or as a proxy for AI.
Yeah,
But you said you like IT services, right, Prashant? Can you take us through the rationale behind it? Because when you look at earnings growth, while FY27 will be better than FY26, we're still looking at mid-single digit kind of a top-line growth.
This sector has seen the maximum outflows if you look at the foreign selling last year. Why? Because many expect this sector to be adversely impacted or even disrupted by the adoption of AI. We have a slightly different view, and time will tell whether that view is right or wrong. We feel while adoption of AI will certainly improve productivity, but client spends are unlikely to come down. And therefore, these businesses may not get adversely impacted. On the other hand, as enterprises adopt AI, there is a fair chance that IT spends may actually accelerate. And these companies have proven to be very agile over the last 3.5 decades, and they have successfully navigated multiple shifts in technology. And we think this time should be no different as well.
Dark horse sector, right? In that sense. And it's underperformed for a few years. Sorry, you wanted to say something, Prashant?
I think, yes, it's sold off very sharply. If you look at the dividend yields, probably it is the highest. Currency depreciation is in its favor. And despite the anticipated impact of AI, fiscal 27 looks to be a better year than fiscal 26. So let's see how it goes.
Well, Prashant, great conversation and a very reasoned view coming through from you. And thank you very much for joining us here on CNBC-TV18.
Thank you, Prashant.
Someone who's got one of the best track records with regards to investment management over a very long time period. We have Suyog Kotecha joining us, CEO and Executive Director of Aarti Industries on the phone line. Suyog, great to have you with us here. Good morning. Thanks for joining us.
Good morning.
So for the chemicals industry and your business, give us a sense of US exposure and what does 18% now mean?
No, I think it's a great positive for the sector in general and also for Aarti Industries. For a country, roughly US accounts for 20% of our chemical exports globally, and in that context, $6 billion worth of chemicals get exported to US from India every year. So in that context, this reduction from 50+% to 18% will help tremendously. Even for Aarti, as part of our total revenue, 17 to 18% comes from US. So it's also a sort of huge positive for us at Aarti Industries. But I think more importantly, the certainty will help sort of decongest a lot of decision making that has got hampered in the last 9 months from investments point of view, from future growth opportunities point of view. So overall, a very welcome move and a huge positive for the sector and for the company.
What were you paying on the 17 to 18% as it was charged 50% till now?
Yeah, I mean, the tariff varied based on the product lines. As we explained before, some products were paying full tariff, some products we sort of exempted as part of an extra 2, and some products, the clients were able to reimburse the tariffs wherever.
So what was the on an average volume weighted? What was the average tariff, Suyog?
I think roughly on 40% of the volume we were paying full tariffs, and I think that's going to get mitigated quite significantly.
40% of the about 18% you were paying full tariff. Yeah.
And your competitors, I presume mostly it would come from China, and other countries. Can you tell us what kind of tariffs they are paying, and how would you be placed competitively now?
I think there are two major geographies against whom we compete, China and then Europe to some extent. I think with Europe we are at par, but given our cost competitive advantage, we should be able to compete quite favorably with them despite tariffs being slightly favorable for them. China, now we will have a significant advantage, right? Because Chinese tariffs, if they continue to remain at existing level, then we will definitely have advantage over them as far as exports to US are concerned.
And China tariffs are 50% plus? What is the number?
In total, if you add up all different types of duties, they will reach closer to 50% odd level.
Okay. All right. Hi, Suyog. Good to see you in. So it's a positive coming in because you have managed to crack the father of tariffs. But what about the mother of all deals? You have some exposure to EU as well. And with the India-EU deal that was signed, are you a beneficiary?
We do have exposure to EU, though from a current business standpoint, it's low at around 5% odd level of our total revenue. But I think from a mid to long-term point of view, it's also a huge support because a lot of long-term partnership opportunities, specifically for European chemical players who are rationalizing their own capacity in Europe, will now get attracted towards setting up that capacity in India. So from a near-term impact point of view, it may not be material, but from a mid to long-term point of view, I think EU FTA is also very positive. I mean, as we discussed, if you step back, right, as a sector, this sector has been, impacted on margin side for quite a while, almost now 2.5, 3 years.
Okay.
But in the last 3 to 4 weeks, with the 3 macro events, I think EU FTA and I think US trade deal recently, but in addition to that, some of the Chinese anti-involution strategy that has also got announced. I think all 3 are actually a big macro positives for the sector, and we hope this will finally start to lead to margin recovery in the sector, which was sort of long due.
Got it. So let's get the near-term trajectory then. Year to date, you've done roughly around 14-15% growth in terms of revenues, with margins in the vicinity of around 13.5 to around 14%. What do you end this year with? And on that sort of a base, what growth can you guide for? What about the margin performance from year on? And I think last quarter you did a capex of around 300 crores. Earlier you were talking about 1,000 crores of capex for the year, but you have upped that to around 1,100 crores. So run us through that detail.
Yeah, I think our midterm guidance is there out in the public, and we continue to stand by it. And in general, I think it's been a positive trajectory. All the actions that we outlined to achieve that guidance in terms of cost, operating leverages, and capex-led growth are in the play. Many of the actions around cost and operating leverages are actually already getting implemented. So I think we don't sort of deviate from that. I think from a capex standpoint, we are ballpark there. I think, we said 1,000, now we're at around 1,100 crores because we saw some incremental opportunities in the market, especially in the energy and polymer segment, and hence we decided to do a debottlenecking, so very efficient capex to get incremental capacity out of existing assets. But the annual number is expected to remain around 1,100 crore range.
Okay. Just one final question. Do any of your products come under Section 232, which still attracts higher tariffs?
We will have to go through that. As far as we currently know, right? But we wait to read the detail sort of fine print and then have a detailed evaluation. But currently, based on the information available to us, no.
So, Yog, great chatting with you. That's Aarti Industries, was one of the hardest hit stocks post the lack of the India tariff trade deal. And today, you are seeing a surge in the stock price. Stock is up 12% now. Yeah.
Before you go to Bajaj, we have the Bajaj management. PB Fintech, I just want to highlight very quickly. Let's just put the stock up. We reported yesterday, and that was an exclusive, that they are going to announce a fundraise. The PB stock, yeah, there you go. They're going to announce a fundraise, and the announcement came later for an acquisition, for perhaps an international acquisition. The stock sold off 5% yesterday, post the story, and is down another 3% this morning. That's a very large correction, especially, with the positive backdrop we've had. We'll try and get Yash with us as we go along for more clarity, for more details, etc., on this important story. But Rima, take it away.
So Bajaj Auto came out with their Q3 numbers. It turned out to be a good quarter. The company's revenues went up by nearly 19%. EBITDA margins at 20.8% versus 20.2%. And profits were up nearly 19%. We have with us Rakesh Sharma, Executive Director at Bajaj Auto, joining in. Rakesh, normally we would have started by asking you about, exports and, margins, etc. But this time, give us your overarching view on the India-US trade deal. I know predominantly you cater more to Latin America, Africa, so your exports to North America are fairly limited. But how does it change the industry? And it's under Section 232, broadly. What have you picked up?
Well, it's certainly welcome news. Quantitatively, for Bajaj Auto, exports to the US, which we do under the Triumph and KTM brands, accounts for about a percentage of our total exports. So even when the tariffs went up, we were at an overall basis not really impacted by it. So now when the tariffs are down, the same sort of holds true. However, having said that, as we sort of build up our business with KTM Austria and through them accessing markets like US, we do foresee more and more production to shift into India, and therefore we will be making more US relevant products in the future. And I think having these tariffs will be certainly very helpful from that point of view. And beyond that, I think the signal which goes out from a sentiment point of view with US and India aligning. There are so many other things, we trade in US dollars there. And so it's good to have this positive sentiment all around. It's good for trade.
And exports on the whole, monthly you're crossing the 2 lakh mark. So this quarter it's been in excess of 6 lakh. And you've also said that the company expects exports to deliver highest ever top line performance in dollar terms in FY26. How do you see the export momentum, particularly for Q4? Does the 2 lakh momentum get stronger per month? And for FY27, do you have a number in mind?
Well, I think Q4 will sustain at the levels which we have been doing. We've been growing at about 15 to 18%. Q4 tends to be a bit shorter because we tend to complete our exports by 20th of March or so. So you have, in that respect, less number of days. But the tempo should be maintained, and we are hoping to, on the average, still clock over 200,000 units per month as an average in Q4. Going beyond that, we are going to be responding to the market quarter by quarter by quarter. At this point of time, as things are now, it looks as if we will be sort of trying to inch up above this number in FY27. But international businesses got these, several moving parts, macroeconomics, geopolitics, etc. So it's very difficult to crystal ball gaze. But at this point of time, we would be looking forward to maintaining this kind of a tempo even in FY27.
Okay, so at least for Q4 near term, that 200,000 plus monthly sales should continue for export. What about margins? If you could talk about the commodity inflation that you have seen in Q3, expectations for Q4, and even in terms of offsetting measures via price hikes.
So the margin story is not a very difficult one at this point of time. Yes, there have been increases on the noble metals package, quite substantial increases, but they have been offset by flattish performance of steel and rubber and some natural products. So on the balance from the commodity side, there has been a little bit of an inflation, which we have taken actions on early Jan to plow those back. Now, as we move forward, that the softness in the Indian rupee has been very, very helpful. And with the rupee trading at 90 plus to the dollar, that is a very significant tailwind. So we're not under any kind of great pressure to manage the margin story given these things. So we will be, but always looking at competition and the impact on demand, etc., and responding to those factors rather than the cost side factors.
So baseline margins of 20% plus should sustain.
Hopefully.
And the EV markets you've pulled back good amount of market share, close to 500 basis points. Do you believe you can go even higher from here? And your earlier competitor, Ola, is struggling out there. Have you had a look at their business?
All the time. So
with keen interest, I meant.
Because that we had major supply chain dislocation, both in two-wheelers and three-wheelers, and therefore, quarter three clawing back 5 percentage points of market share and getting back to a firm number 2 after having slipped down the league table is very, very welcome. And almost in the closing period of quarter 3, we also launched our new edition, which sort of opens up a new segment for the Chetak scooter, nimble, agile Chetak C25, targeted specifically to the youth and women, and that should open up. So the Chetak portfolio has got bolstered, and we will therefore obviously be looking forward to improving our market share in quarter 4. Electric three-wheelers, also we had slipped down, but there the return has been quite rapid. And we are, for the last 2 months now, at the number 1 position. I think January we've exited at about 38% market share in the e-auto segment.
Okay, all right. Thank you very much, and always appreciate your time here on CNBC-TV18, sir. And good luck as you continue to execute. I just want to quickly make a mention of what markets are doing before we go any further. 640 odd points higher right now. Look at that. I mean, it's a green-looking screen across the board. Sensex up 2,000 points. You got the Nifty Bank, which is up 1,350 points. That's 2.33%. Mid-cap index is up about 3%. 1,640 points. You know, beautiful and healthy and all of that stuff, right? And after a long time, because we've been kind of sort of struggling and the mood's been a little off and down, hopefully this is durable over the next many trading sessions. Rupee, of course, is now the dollar rupee, that is. Will also come up on your screen. It's seeing it opened up 1%. The dollar rupee opened 1% lower. Rupee was up 1%, and there you go on your screen, 1.25%. So under 90 now, and perhaps even beyond that. We'll see. That's the rate this morning. 90.34 for now is where we stand. Should we take a break and come back? Yeah, let's take a quick commercial break. PG Electroplast Management will be with us on the other side.
More earnings reactions. The next one is PG Electroplast. Well, the first half of the year was quite a washout for PG Electroplast. The company's revenues in the first 6 months of this fiscal year went up by 8%. But in Q3, the company has come back very strongly. Q3 revenues have gone up by 45-46%, with the room air conditioning business making a comeback with an 80% top-line growth. It appears to be a lot of channel filling ahead of the January 2026 energy rating change. Vikas Gupta, Managing Director of PG Electroplast, is now joining us on the show. Thank you very much for joining in. So the star this time was the room air conditioning business. But I understand that was an account of the energy changes which come in, and there was a channel filling. So going forward in Q4 or first half of FY27, which is also, you know, sort of the peak market for you, what kind of growth should we expect for the RAC business?
Good morning, Rima. Definitely, I would look at like Q3, particularly was marked by the channel filling that has to be done, and the brands were picking up a lot of inventory because of the price increase in the models of different air conditioners based on the rating energy table change. So now that led to the good growth of AC sales in our Q3 numbers, and December was one of the best sales months for us for air conditioners. So we feel going forward in the Q4 of FY26, we are seeing that the inventory is still there in the channel, and that inventory still needs to be picked up. And we are just hoping that the summer onset should start in southern India in next 2 or 3 weeks. We are doing our own channel checks, and still the market has not opened up. So we remain confident that the market should open up, and we should be able to meet the sales guidance that we have given for our company. And we remain optimistic based on the guidance and based on the order book that we have with us from our clients.
Hi, Mr. Gupta. Good to see you. Is there a possibility that you can outbeat this guidance, though? 17 to 19% revenue growth and the PAT number of around 300 crores for FY26?
Good morning, Nigel. So I would like to stick to the revenue guidance that we are given of 5,800 crores. That I will not like to touch upon right now. Because we need to see how the next 3 to 4 weeks will look out.
Got it.
January month was a little tough because there was a lot of inventory which was already picked up in the month of December. So we are hopeful that the going period of next 6 to 8 weeks should be better for us.
And PAT will be around 300 crores by the end of this year. Is that correct?
Yes, sir. Yes, sir.
All right. What's the update on the compressor JV, sir? We have been talking about that in the past. But what is the latest?
So, Nigel, I would say the compressor thing is still moving, and we are hopeful that we should be able to close in next, I would say, 3 to 4 weeks. We are hopeful, and it is still work in progress. There is a positive movement on that. And let us hope that we should be able to close it in the next 3 to 4 weeks.
Okay, just give us a sense about inventory, because you mentioned that a couple of times that inventory is still high in the system. So could you tell us what is the norm, and in number of days, what is it currently?
So inventory, we need to look at two different levels. One is the inventory at our company level, and the inventory in the channel with the trade partners. So when we look at the inventory at our level, the normalized level of inventory in the peak season should not be more than 30 to 40 days.
Okay.
And still we are sitting at almost around 45 to 50 days inventory, which we are expecting that should get normalized in month of February and March. Regarding the channel inventory, yes, there has been a lot of push of the inventory by all the brands to their channel partners before the change of the energy table. So there is a inventory sitting in the channel, and we are just hoping that it gets cleared with the secondary sales picking up in the coming 2-3 weeks.
Vikas, good morning and good to see you again. So stocks up 7%. Just a quick word on commodity price inflation, right? How is that? How are because room ACs, etc. Copper is a big one. Is this going to? We've seen this in previous cycles. You know, it doesn't hurt, and then it suddenly starts to gross margins, etc., start to come under pressure. Your thoughts?
So Prashant, definitely the commodity prices are playing a lot of pressure on the bill of material cost. And we are in active discussion with all our clients for the price increases. In some cases, we have been able to achieve the price increase. In some cases, still under discussion. Definitely, there is always a lag. Whenever there is a price increase coming in, there is a lag, and we are in discussion. So it might put some pressure on the EBITDA margin, for which we have already guided. If you look at the EBITDA guidance that we're given for FY26 is slightly lower than the EBITDA that we were able to achieve in FY25. So we are hopeful that we should be able to get the price increase done with most of the clients.
And these usually happen annually, or it's there?
So the prices that we settle with our clients are mostly on the monthly and the quarterly basis.
Okay.
We are able to revise the basis on some.
But it's a tough market to get price increases, right? Cost of ACs is already higher because of those energy ratings. So there is that affordability issue, and now this. So it's a tough kind of a space.
So definitely, the competitive intensity is also improved and increased, and getting a price increase in such kind of environment is always tough.
What was the impact of commodity inflation on your margins? Q3 margins were 8.3%. 9 months, we're at, I think, close to 7.5%.
So, Rima, as I told, if you look at the previous 9 months, the hit on the margin was because of the other issues like the inventory carrying cost. It is not largely because of the commodity. The commodity prices have started moving up in the last 3-4 months only. So that impact is still about to come in there. But we are hopeful that we should be able to get the price increase from the clients.
So how many of your clients, what percentage of your clients have accepted a price increase already? What is the extent of price increase?
So the price increase almost is whatever is the commodity increase is always kind of a pass through to all our clients. And I would say in the case of 60 to 70% of the clients, we have already been able to get the price increase.
Yeah. Vikas, we'll leave it there. Thank you very much for joining us. It's a pleasure having you here and good insights on what's happening with your company and, of course, the industry as well. We wish you all the best. Well, Nigel has walked across to the wall and we're going to talk about stocks, right? Textiles is what we're going to start with. Nigel, take it away.
Well, that's right, Prashant. Just take a look at this. You know, you have the Nifty, you have the Sensex, you have the Nifty Bank. All of them are dancing away in today's trading session. Also pull up the mid-cap index. That's doing very, very well. And by the way, this is the key number that you'll be tracking today. It's been a while since we saw 2,500 stocks that are advancing and the number of stocks declining only around 275. So within that ratio of around 10:1, it's been a long, long while since we saw something like this. But the sector clearly, as you said, is this textile space. So Wellspun Living, that's a stock that's up and about. You have Gokul Das, that's locked in the upper circuit. In fact, you can't, get some of these names because they are up 18 to around 20% or thereabouts. And pull up a few. Himmat Singar as well as another stock that is gaining in today's trading session. So all the textile pack actually is doing well. And Pearl Global, as we heard the management earlier, they said that this is a significant positive for them. So that's why that stock as well is doing well in today's trading session. Indocount, the last time I checked, that stock was locked in upper circuit. And a lot of them, they're still locked in upper circuit, while some of them have come off the top. Besides that, other stocks that have some exposure to the United States. ADF Foods, that stock, in fact, is moving in today's trading session. So I think we should get ADF Foods up for you on the screen. Doing pretty well in trade today. Carousel is another stock, smaller name, but they have exposure to the United States. So that's why that name is doing well. And we have the management of Aarti Industries. Well, they said as well, there'll be some relief that will be coming out there. And it helps them in terms of competitive intensity globally. So Aarti Industries up more than 10% in today's trading session. So a lot of stocks doing pretty well. On the flip side, I think one of the big losers today is PP Fintech. Yash's exclusive yesterday. Well, that stock ended lower in trade yesterday. And today, in fact, it's a little bit lower as well. Indian Hotels is another stock, actually, that was doing well. If I remember correctly, there was Goldman Sachs notes that had come in earlier today, and they're rather bullish, and that's why they initiated coverage on Indian Hotels. It's up close to around 2.5%, but from the recent low, that stock has gained close to around 10%. Net, beautiful trading session. Take a look at the screen. It's been a while since we saw the screen like this. And this number, 2,500 stocks advancing, that's what's making your portfolio feel very, very good. Back to you guys.
All right, Nigel, thanks very much for that. So, yeah, I mean, it is looking, it's a good-looking, big, grand screen, and it's a big, grand open for now. Mihir Vora is with us, Chief Investment Officer at Trust Mutual Fund. And we also have Rahul Bajoria, Head of India and Asian Economic Research at Bank of America Global Research. Gentlemen, great to have both of you here. Thank you very much for joining us. Rahul, you're the first, I think, economist that we have on. And so let me start with you. I'll give you the first word. So it's a happy occasion. The deal is done. What does this do in terms of growth impulses, terms of sentiment? The stock market is a powerful indicator of it, and we are seeing what's happening there. But beyond that, on a durable basis, what does it do? And any nuance, any detail you'd still wait out for in that sense? Go on.
Sure. So I think, first of all, this particular announcement obviously takes away the months of uncertainty that, both the RBI and the government have been kind of experiencing as far as the growth outlook is concerned. Now, obviously, the one question mark, I have is whether that kind of derails or at least slows down the pace of reforms that we have seen in the last few months. But my sense is that, it could, basically leave India into a situation where, now we have access to large markets globally, from a trade perspective. We obviously have had a fair amount of policy easing, both on monetary and fiscal side. And with the kind of commodity price backdrop we have, we should see a meaningful improvement in the growth outlook. One of the reasons why we did not upgrade our GDP numbers in yesterday's note was we are waiting for some specific details about what kind of import commitments have we made, what kind of sectors have we opened up. Obviously, the fine print matters. But I think it's safe to say that, the sentiment improvement and that we see in asset prices this morning is going to be a pretty big fillip as far as the economy is concerned. And so from here on, we think that the momentum momentum on the economic side, which already was looking pretty okay, to be fair, in the last few months, we have seen the growth numbers holding up. That probably gets a further boost from a sentiment standpoint. And that, my sense is, could easily push growth rates above 7% in the upcoming fiscal year as well.
Yeah, there's a growth impulse as well in that sense. That other point, any specific details still awaited? Have you heard anything? I mean, and people, of course, we'll hear, I'm sure, from the minister here in charge and others as well. But any specifics you're still waiting out for?
So one of the key questions is when, President Trump in his Truth Social post had mentioned that India is going to lower its duties to 0%. I think we would want to see whether this is a all-encompassing reduction or, are there carve-outs. But I think overall, when we look at the effective tariff rates on India, our back-of-the-envelope calculations were from around 35%. It drops to around 12-13%, and, potentially even a bit lower given the changing mix of the exports, towards electronics, which is exempted. So I think net, you will see a meaningful improvement in the competitive landscape of Indian exports. So even if, there are, fine prints and specifics that we are missing, my sense is that the overarching message is that from relative to where we were, say, last week to where we are right now, there is a meaningful boost to competitiveness when you put both the EU deal and the US deal.
That's the export bit, but on the import bit, which you refer to fleetingly, you would expect there will be carve-outs, right? Obviously, I mean, things like agriculture and many other things. despite that post from President Trump?
So I would assume there would be certain carve-outs, but the absolute numbers, I think, have to hold. Right now, the question is, India already imports about $50 billion of goods from the US. So does that mean that we bump it up to $100 billion on a run rate basis, or is this $100 billion on average every year for the next 5 years? Over and above that, I think those are the specific details which are missing. But my sense is that it will be more of a substitution rather than an incremental increase. Remember, India's imports are also going to grow in the next 5 years, which in turn are going to basically place a fair amount of space for India's imports to rise. So I'm less worried about the specificity. I think we have to look at the positive headline impact here in the way policy is going to be framed. And so from that perspective, I think the first reaction is that this is going to be positive for growth. I think what we are basically debating is to what extent is it going to be positive.
So case for GDP upgrades out here in India. Thank you very much, Rahul, for joining in. Mihir Vora, Chief Investment Officer at Trust Mutual Fund, is also with us. Mihir, already 2.5% in the bag so far in the morning. Do you see with this announcement, markets can move up by, say, 10% in the next, by the end of this year, or maybe in the next 6 to 9 months? And what are the big ideas now? Have you been buying this morning?
Good morning. Thanks for calling me on a good day. Yes, it is a big event, and this is one of the key triggers that was holding the market back, and now we have got it. I remember in our weekend show, we had discussed 10 days ago about this is the big trigger, so that's happened. And I think, yes, 10% is absolutely possible for the markets in due course. May not happen overnight, but the fact is that we are catching up versus the rest of the world in a big way, and we have to, because as we know, as we have seen last year, India was amongst the worst performing markets globally, both in terms of absolute numbers and including the currency. So we have a lot of catching up to do in the currency. We have a lot of catching up to do in the equity markets. And with the underperformance, as we have discussed, the absolute and relative valuations of the market, whether it's in large caps, mid caps, or small caps, have become reasonable. So we're starting off with a low base, very pessimistic sentiment, currency weak. And now with this deal, I think a lot of the FDI, FPI flows, etc., which we are waiting on the sidelines because of this geopolitical uncertainty, will come in. I think the key trigger that we were waiting for is this deal, because it is the key to FDI flows and FII flows, which I think will start coming in a big way now.
Right. Hi, Mir. Good morning. Good to see you. And as they say, right, form is temporary, class is permanent. And hopefully it's our time to shine now after the underperformance you've seen the last 12 to around 15 months. That said, Mir, what are the cash levels you're sitting on? And are you all deploying today? Have you all deployed some money in the last few days? Budget day as well. It seemed there was an over-exaggeration on the downside. And from there, we've seen a good 1,000-point move, actually. What's your allocation strategy as we speak?
So we're keeping normal levels of cash. We had a little higher level of cash, so we are deploying it over the last 2-3 days. And I think it's going to be more about stock picking, because while the markets are up 2.5%, you do see stocks which had been beaten down, and sectors which had been beaten down on the back of tariffs. They are starting to rebound, and those will create a lot more alpha than the broader market. So it's time to go back to sector and stock picking, and that's what we are trying to do now. The key is that the currency, I think in my view, has been a big factor. And if you see today, the rupee is appreciated by almost 1.2 rupees versus the dollar, and that's going to be the trigger where people now see the geopolitical risk and the currency risk out of the picture. And then if you adjust for that, then the absolute returns in India look very good. So I think we will keep deploying the money over the next few days.
Yeah, 100%. Mihir, a shorter conversation, but punchy and useful to get that quick input from you about where we are at now after this big deal. Congratulations, I can say, as you manage your portfolio, and it'll all be looking good, looking better, much better as compared to where we were yesterday and day before yesterday. Those are visuals coming through right now. And Prime Minister Modi, you can see his top ministers alongside him. You've got Mr. Amit Shah, you got, and others. Rajnath Singh is there, yes, and there are others as well. I think this is an NDA meeting, right, where Prime Minister is. Yeah, this is an NDA parliamentary party meeting. And we'll have to see if there is a comment or two which comes in from the Prime Minister with regards to the trade deal. And I know we most definitely will hear something at some point. I'm not sure this will be now, but those are visuals and general sense of enthusiasm, of course, with what's happened last night. And I think it's kind of sort of, anyone is untouched by it. Those in the market, those outside of the market, I think this is good news for the country in terms of settling this very thorny kind of relationship we've had, this path we've been on for the last year plus or so. Yeah, so that's that. We are getting you reaction after reaction. Markets, we got that economist reaction. We'll get you more corporate reactions as well as we go along. But markets leveling off a little bit now. 630 odd points is where we are at this stage. Well, I just want to play out a quick soundbite. Our colleague Chandra from Money Control got a reaction out of President Donald Trump. This was, of course, in Davos. I just want to play that out. President Trump, of course, saying that calling Prime Minister Modi a close friend and expressing confidence of a good deal soon, which has now materialized.
Mr. President, this is Chandra Shrikant from India. Can you give us an update on the India-US trade deal?
First of all, I have great respect for your Prime Minister. He's a fantastic man and friend of mine. We're going to have a good deal.
It was a global exclusive, our colleague Chandra from Money Control on that soundbite. Well, we've got Baba Kalyani, Chairman and Managing Director of Bharat Forge, now with us. Mr. Kalyani, good morning. Great to have you with us here. Thanks very much for joining us. It's a good day. And I think the sentiment, of course, is upbeat. It's reflected through stock markets, rupee, etc., etc. But as an industry leader running a variety of businesses, what's your perspective on this before we get down to implications for Bharat Forge and specific businesses?
Well, as far as industry is concerned, you can't get up any day morning for this kind of news that we've been waiting for such a long time. It's been a very, very positive development, and I'm very happy that we have got everything done as far as India-US trade deal is concerned. It's not just about trade; it's also about relationship. It's also about the future, and I think this fosters very good doings for India. I think congratulations to our Prime Minister, our Commerce Minister for making this happen.
Mr. Kalyani, morning, and thank you for joining us on this historic day. But just to get to the nitty-gritties, for Bharat Forge, what percentage of your sales come from North America or US in particular? And what percentage of your product portfolio will now attract 18%? And how much will come under Section 232, the national security tariffs, where the tariffs would be higher? Do you have any clarity?
Well, we don't have any clarity. Largely, the products that were going for passenger cars were with Section 232. But I believe from whatever I've heard from this morning from the U.S. and late last night, that Section 232 also is under discussion between India and the U.S. to bring it all to a levelized tariff of 18%.
Have you had any... Okay. So what percentage will come under 18%? Sorry, I didn't get that number.
For us, we believe almost everything will come under 18%.
Okay.
And if we look at our exports traditionally used to be in the region of about 500 to 550 million on a revenue of roughly about 1 billion. So 50% of our exports were to North America. 50% of our revenue came from North America. Now our revenues are much higher than 1 billion. So we are expecting our exports to almost go to a level of close to 1 billion. Not all will be from North America, but roughly about $700-800 million will be from North America in the coming year.
Have you had any conversations, sir, with your customers regarding the cut in the tariffs?
Yeah, we have had some conversations. Actually, it's too early to have conversations with customers. But I want to say one thing, we've been discussing with our customers for almost the last 1 year. And I must say that all our customers in North America have been immensely supportive. We are very grateful to them for working with Bharat Forge and believing in us and believing in India to continue their path for long-term global strategic engagement. So I think, this whole idea about resilience in the supply chain has worked out and it's been great, and I think the future will be even greater.
All right. Hi, Mr. Kalyani. Good morning and good to see you in. You're saying that, you know, that ambitious target with regard to the exports and exposure to North America, you want to put a timeline to it?
Well, this is the timeline for 26-27, this coming year from April.
Got it. All right. What about, sir, how's demand on ground? You know, we're getting mixed trends that we're hearing about. So given that now we have this out of the way, is demand good enough?
Demand was a little slow for the last 6-8 months because the commercial vehicle, the heavy-duty trucks, demand itself had gone down by 50%. But all indications are that the coming quarter, we will see almost about a 20-25% rise in our exports compared to the last quarter, and then another 20-25% rise in the quarter after that. So in 2 quarters, I would say the demand will come back to what was originally anticipated as 100%.
Mr. Kalyani, just very briefly, you said U.S. exports will rise to $1 billion and...
No, to $800 million.
To $800 million this year. That is FY 26 or 27?
No. Our total exports will rise to 800 million.
Okay.
From a level of 400 million for this fiscal year.
Okay.
So it'll almost double.
Okay, that is FY 27. And of course, I mean, all of that.
FY 27, correct, yeah.
Okay. So on the defense side, right, we had a big allocation increase in the budget on Sunday. So any brief thoughts? I mean, what does it does for that business?
I think the defense business will also grow. I think largely it depends on how fast the decision-making process takes place. We have a lot of work in progress on many programs, many platforms. We are exporting roughly about $30 million a quarter in defense, roughly. And I think that will continue. So overall, the defense looks very good. We're also setting up our new facility in Andhra for making new products. So let's see. I mean, right now we're in a silent period, so I can't give you too much forward-looking statements on this.
Yeah. It's a pleasure, Mr. Kalyani. Thank you very much for joining us and being with us on this. As you said, well, you don't get up every day and, to this kind of news flow. So this is certainly very, very good news. Thank you once again, and appreciate your time as always on CNBC-TV18. Take a quick commercial break here. We got about 600 points on the Nifty. Manisha Gupta will be with us to focus on commodities on the other side. Stay tuned.
Welcome back. Let's talk commodities. Manisha is now joining in. Manisha, for so many days, the movement, the action in commodities overshadowed equities. But I guess we can say not today. But what's happening in your world?
Oh, well, absolutely. Today, absolutely not today. But you know what is happening in commodities as well is after that very, very sharp declines that we've seen in the last couple of sessions, we are looking at commodities coming back as well. So whether it is about precious metals, base metals, energy, all of that is trading in the positive. Not so for the crude oil prices. Well, yesterday was a more than 4% of a decline, which is the biggest decline in 6 months that we've seen come in for the crude oil prices. And after that decline as well, 66 is just about holding on the screen. So 4% of a decline in the overnight markets, but it is still trading 8% in positive for 2026 so far right now. Well, a couple of things to watch out for. One is that the US and Iran conversations have resumed. There are positive statements coming in from both sides, and there is an expectation that US and Iran could continue dialogue starting this Friday itself. The second is about the dollar index, where we have seen that one gain up to a one-week highs. Not so good for many of these dollar-denominated commodities, and is the reason the prices are in check. The third thing is about the OPEC meeting. Well, that has come and gone and nothing has been said. OPEC says that for the month of March, for this quarter, they're not going to be increasing production. Remember, in the last year, from April until December, OPEC did bring in nearly 2.9 million barrels per day back into the market, which is 3% of the global demand. Most importantly, though, is the US lowering tariffs on India from 50 to 18%. And of course, that has been done. One of the reasons there is, or one of the clauses there is, that India will stop buying the Russian oil. Well, India will have to buy more oil from US and even Venezuela for that matter. And the numbers do show that India has bought more from US and Venezuela for the month of January there. Take a look at the Russian share really. In FY20, it was 3% of India's imports. By FY25, we saw that number increase to almost 35%. Now, that really has been a concern. But when you look at the overall numbers as well, it has been going down in last few months. There is a report put forth by Reuters which says the highest that India imported from Russia stood at around 2 million barrels per day. That declined to an 11-month lows of around 1.3 million barrels per day in the month of December there. January is expected at 1.2 million barrels per day, and what has already been contracted will perhaps continue to come till the month of March. It could be 1 million barrels per day in the month of Feb, and by March is expected to decline to 0.8. But the thing also is that India oil purchase, Russia, of course, India buys nearly from 41 countries at this point in time, and the OPEC share of India is at 11-month highs right now. Now, markets do believe that as India shifts to other countries, the discounted oil benefit that India has had perhaps will go out, because the Russian oil was cheaper by $5, even $10 at some point in time. Now, India will have to buy at world prices with higher shipping costs, insurance, freight rates, etc., and that will take the prices on the higher side. There's a report from SBI which estimates that Russian oil imports going out and India coming into the markets now will mean that our bill for fuel imports is going to go up for the next fiscal.
All right. Thanks very much, Manisha, for that. Commodities there in focus. Nigel has walked across to the wall once again, and we are, of course, doing these market checks because, well, there is a lot of stuff worth checking out. Nigel, take it away.
Well, Prashant, we started off with a 1,200-point gain. The last time I checked, we were up only around 600 points. So I'm hoping that the Nifty actually can at least keep up with this pace. Hopefully, we go home with gains of close to around 5 to around 600 points or thereabouts. The advancing number of stocks, though, that's still encouraging at around 2,500 stocks. Well, the big boy has come to the party. Reliance Industries, that's been doing a bit of the heavy lifting, and that one's holding up in trade. So when the big boy is up 4%, and I'll tell you what, it's taken off a couple of technical levels, which were at around 1,420. And when Reliance Industries moves, the other one that derives a lot of its value from there is Jio Financial. So that one as well is up close to around 7%. Remember, on the way down, that got harder hit. Now it's rebounding in trade. But there are textile names, and I'm trying to get a few more textile names up for you on the screen. You have Kitex that should come up for you. That's locked up close to around 20%. The other one is SP Apparel, so smaller name. So we have the larger names that are doing well, and now the smaller ones as well up and about. Some more stocks that have some exposure to the United States. Apar Industries, I recall Mr. Desai had spoken to us here on CNBC-TV18. In the last few quarters, though, there has been some slowdown. But however, in today's trading session, Apar Industries is one of the top gainers, up close to around 15% as we speak. Add to the list a Cosmo First that's come to the party. These are stocks that have seen a sharp correction from the top. Even a PCBL, I recall the promoter entity had infused money at around these levels. That stock is well moving higher on rather good volumes. The few more big movers that we're seeing in today's trading session, whether you're looking at Technocraft, Avanti Foods, you have CG Palm, as well as Sterlite Tech. So a lot of stocks are participating in trade. And BSE, what happened to the STT? Well, the stock now is higher than what it was on the day of the budget. It rallied yesterday, and today as well it put on some more weight. Add to the list, Grow. That's the other stock that's up and about in today's trading session. But we need to highlight a few losers as well, because this market has come off the top. So Misho is under some pressure. That stock, in fact, is losing in trade. You have Paradeep Phosphates. That's another stock that's lower in trade. Walchand Nagar continues to see some selling, and PB Fintech as well. But net, the number that you're celebrating is the Nifty. The Nifty is up close to around 2.5%. The sensex holds with gains as well. And the advance ratio is something that you like. We haven't seen this in the while. Don't let it slip. Hopefully, we go home with some solid gains by the time we wind up today. Back to you guys in the studio.
Thank you very much for that. Get into a break. On the other side, we'll connect with Shantanu Sengupta of Goldman Sachs and Chandresh Jain of BNP Paribas and continue our discussion on the India-US trade deal.